This trade recap video that I want to do. As you can see on the screen, I already have I have quite number, the trade on the screen, and usually people say, oh, did you check the trade, or this was just hindsight analysis. So you also have proof here that okay, the trade was taken. So I'm going to be walking you through the whole logic, why the trade, why did I take the trade, why did I go long, and what was the reason behind it, right? So to do that, I'm just going to take out all of this price, all of this, whatever will happen on the screen. So just a sec, I'm going to leave that in place. Okay, so let's take this out. All right, so I've taken almost everything, right? Yeah, taking almost everything. Okay, so I've taken all of that out. So let's take this to the trade setup. Actually started for Friday. So today I'm doing this review on Tuesday morning. So let me just take that back there. So here we are Monday, and then Friday at around, let's say 5:30 or 6:15 a.m. Cool. So let's take that there. Okay, so this was where we're at, on the Friday, and then this was basically the price action, so this was what we had. Now I also have this actually on the trading floor. I did share this. So let me just pull that up. So I shared the analysis on the trading floor. I shared this with the the exclusive channel. So I have this here. Sorry for the switch between the dark themed and the light themed interface. Okay, so this, I think Friday was 20th. So here we were. So you can see here, basically this was the structure here on Friday. I shared this. And also on the 15 minutes I shared this. The market structure is clearly bullish on the 15 minutes. Ideally I would want to see a bullish continuation chalk before going long. Okay, so this was the commentary from Friday. Now you put that side by side with what we have here, so you can see it was literally the same structure, right? So let's just draw out what we have here. So here we already had, this was like I'm just going to use, so that was like a boss to the upside, and then price after taking this high returned, and then respected the low, the previous low that was registered by the candle, and then pull back up, and then we're coming into the new day of Friday, and price was around this area. So with that in mind, I'm going to take this, I'm just going to draw this across. All right, it's a large candle, but I'm just going to draw this part of the candle. Now also another thing is, you can see here that price, this candle swept all of these lows before pushing higher, so that gives us a liquidity zone, right? So now price was coming here, so it's a simple, well, I would say simple right now, right? So depending on your level of your knowledge or your confidence in the market, and also executing trades, this would differ, but yeah. Now clearly we can see that our next target, because the market is bullish, our next target is going to be this area. Okay, and someone's going to say, oh, okay, how did you just do that? How did you just assume that this is going to be the next area? There's actually a reasoning behind that. Let's go to the 4-hour and let's look at what we have on the 4-hour. So on the 4-hour here, you can see here clearly that we have, this was the low that was that got taken out, and then we had a new low, and then this low now led to this high being taken out, right? So now clearly we can see that the 4-hour has changed from bearish to bullish, right? It was bearish here, but now the low has taken out the previous high, and now it's bullish. And then after that, what has now happened? The 4-hour has returned, has pulled back. Okay, here we have this zone has been mitigated. I believe drawing all of these things you know how to do already. So let me not dwell too long there. Okay, so with that, we know that the next high to be taken out after price has changed from bearish to bullish, the next high to be taken out is this area here. So whatever we're doing, we're not looking for shorts, because we know on the higher time frame that the market is now bullish, and all we're interested in is catching longs that will take us to this area, right? So that's all we're interested in, so no shorts. So with this in mind, our bias is rightly placed. So we're not looking for shorts. We cannot be caught on the wrong side of the market. We're only interested in longs, and then that's what we're looking for. Okay, so that is that. So the 4-hour has settled that. So let's go now to the 15 minutes. So with that mindset on the 15 minutes, we cannot see this, and then we're saying, oh, I want to short from here. I want to short from here to where? It doesn't make sense, because it's not in consonant with the higher time frame. The higher time frame tells us that the market is buying, right? It's a bullish structure, so we're only interested in looking for longs. So what I had said, on this day, you can see here the structure here. What I said was I was waiting for a bullish confirmation, right? A bullish, chalk, and then that would allow me to now position myself to take, the long. So even though I knew that this was the target, I did not just say, okay, it's already London open, I'll just place an entry here and then just do that. Even though I could do that, because if I put my stop loss below this area, I could just do that, right? But I may not necessarily get the kind of entry I'm looking for. So I was waiting I wanted to see a bullish stroke, and then that would tell me the market's really, is ready to go, and then I can position my entry. So let's see how all of that played out. So 6:15, 7 a.m. So you can see, so 7:15 a.m. you can see the market pulled deeper into this zone, and now we have something here. Let's see this low here, so I can draw this. You can see that's a sweep. This low got swept, and then what I had said was I was looking for a bullish chalk, and then if maybe this high gets taken out, then I'll place my entry and target this high here. So that was it. So let's see. So here we go. Okay, so this was my confirmation now. The price was now ready to go. So with this, I now placed an entry here, and my stop loss was below the sweep zone. So you could see, if I just placed here, that would have been okay, because I could have actually placed something like this, and that would be like 11 pips, but that could have also been much, anyways. But so with this, I now placed my stop loss below here, and I was able to extract 1 to 8. Okay, so you can see the entry was around 5693. You can see the street here, 5693. So let's see, what do we have here? 5693. 5693 was around here. Yes, so this was it. And then my stop loss, okay, I don't have that on the chart, but I think my stop loss, anyways, I targeted the 1 to 8. So let's see, 1 to 8.5. So my stop loss was likely, let's see what it was, I think maybe 5.5 or something, because it's 8.5. Yeah, I think, let's see, yes, so it was 5.5 pips, around 5.5 pips, just below this area. That's what my stop loss was. So with this, I now knew that the market was now ready to push higher. Now, there are a few things I need to point out here. A few things could have happened, right? The market could have just moved without me getting an entry, and that would have been painful, right? And then that would have probably made me, think, oh, I could have just, entered here, and then just because I already knew where the market was headed to in terms of structure and all of that, I had a sweep zone, I had a lot of confirmation for me to take longs, but I was just wanting to look for another additional confirmation, okay, before I considered longs, and that worked out. So let's see how that worked out. So during the London session, we did not get an entry. I did not get an entry, but my pending buy limit was still, in place. It was around 1:30 during New York session. The market returned, gave us an entry. I remember that clearly, of course. And that was it. So this was it. So you can see this is where, we now got an entry around 1:15 p.m. UTC plus 1 time. And that was when we got an entry from Friday. So now, because I knew this was my target, so that was it. I wasn't bothered about looking for additional entries, just allow the trade to play. So, well, it took a while because it did all through Friday until Monday. So you could see price was just played around. The market closed on Friday, and then Sunday the market opened, and what happened next? Price, returned almost to the point of entry. Now let me explain something here, because this is where a lot of times, new traders also miss it. If you don't have confidence or clarity on where price is headed to, you're going to become fidgety, you're going to become jittery, and you wouldn't have the patience to be able to wait for your setups to play out. The market doesn't usually move in a linear, you're not just going to have something like that. Oh, the market comes, taps you in, and then boom, it goes. The market does that sometimes, but it's not all the time. So if you don't have confidence in your setup, you can see this type of price action here. This is if you're someone who is stuck on the chart, and then you're not really going about living your life, doing other things. You can't just get lost, or just get triggered, or just get uncomfortable, or just affect your psychology by looking at price like this, because you see the money is going in your direction, it comes back, it goes, comes back, goes, comes back, and then again a new week, you've left a trade since Friday, and then you've come into a new week and the market is coming back. What are you going to do? A lot of people are going to get fidgety and they're going to sell off, or you're going to take off your positions, and just all sorts of things, or maybe even move your stop loss across to around this area, and then you get stopped out. You have to be confident, on your trade setup for you to really make it. Anyways, enough of that. That's part of psychology. Okay, so here we go. So this was now Monday, 5 a.m. So now I did not take this morning trade, because I always want to see that whatever position I have in the market, I want to see it play out first before I consider adding or stacking positions. But there was also a setup here, and I'm going to show you that. So of course saw this, but of course did not take it. So you could see here another sweep of the low. Do you see this? Just the market repeating itself again and again. What do you see here? Can you see the similarity between this guy here and this? Can you see this? Perfect similarity. Okay, and this is another thing about time and price. When time meets price, that's always the best time to enter the market. So this was London open. You can see this was London open on Friday, and we had that momentum that came into the market, time and price, and then that gave us the pattern we needed to go long. And now we're coming to Monday, and we're getting the same thing again, time and price. Okay, well, that's another thing, but that's bonus for you. Okay, so now what are we expecting? So with this sweep of of this low, I'm expecting this high to now get taken, and then we can now go long. Okay, so let's see how this works out. Okay, there we go, and that was it. So you can see that now this candle here essentially took out this high, right? After the sweep of this low, the high got taken out. So with this was a nice area to enter. But I did not take this trade, like I mentioned, because I had an open trade, and I also wanted to just stack my positions when the first one is here to play out. So this was a good one, and also the same target like this. So that's a good 1 to 5 thereabout, right? Depending on what you want to extract from the market, but that's a good one. So this was the trade, the second trade. Watched it, but did not do anything. And that was it. So you could see laid out nice. Now this was something that you see this came close to hitting our TP, but then started reversing. But because we know where price is likely headed to on the 4-hour, let me just go back there. This is super important, because when you have clarity on what you're looking forward to, you don't get fidgety about nothing. You can see the price is even yet to get to our target, our 4-hour target here. So there's no reason to be afraid, right? If your analysis is correct, if you know what you're doing, then you just have confidence in your analysis and allow the market to play out. Okay, so with all of this price action, on the lower time frame, it meant nothing, because we know that on the higher time frame, we've not even gotten close to where we're supposed to get to. And by the way, let me just make that visible here. So let's make this 4-hour target here visible on the 15 minutes, so we can also see that and also use that accordingly. Okay, so let's go back. Okay, so nice. Now look at this. So you can see this is where the 4-hour target is. Now a question you're gonna say, okay, if you knew that this was where price was headed to, why did you not target this area? And that will be a very valid question, and I'll explain shortly. And also here, why did you not target this area? I'm also going to explain shortly. Now, when it comes to trading, you need to understand your risk appetite and also your psychology. If you're not someone who is at that level where maybe you have a lot of you've made a lot of money, and then you can afford to swing, I would just advise you, hey, simply you just need to be conservative in your targets, right? Even though this is a swing target, and we've identified that on the 4-hour, that's where price is headed to. If your psychology is not yet robust, right, you may just be hurting yourself trying to catch swing, trades. Instead of doing that, why not just stick to catching, your immediate conservative, highs on the 15 minutes. So this is the immediate high. We target that. We look for another entry. We target the next 15 minutes high, and then you continue to build like that. And there will be times, of course, where the market will give you an opportunity to swing. Maybe you've already made a lot of money already from that trend, and then you just need to just follow the trend and then just swing it. It could happen, but it would come with experience, right? So I wouldn't advise anyone who is just starting out to begin to swing trades. Just be conservative in your targets, okay? And this is a good way to be conservative. Anyways, that's that. So but we know that on the 4-hour, we're expecting this high to get run over, and based on the market structure and all that I've spoken about earlier. So yeah, so let's see how this played out. So this is London session has come to a close. New York session was coming on board, and then now, and that was it. So this was basically when our trade from Friday hit and that was it. Okay, so this trade played out during London session. I did not take this trade because I already had an open trade, but then we also had another entry which I'm going to show you now shortly. So here we go. So that was it. So our target was now hit. So 128.5 banked, and that was it. Okay, so you can see this was the trade. As I can show, I'm showing you here. So yeah, so the trade was taken. It's not just you know, hindsight analysis and all of that. Okay, so let's analyze what we now have. Okay, let me just move that out of the way. So here you can see now London session has played out. What do we expect next? Well, we expect that New York is going to give us another entry. So look at what we have here, and I'm going to explain this. Now, another thing, by the way, I love doing, I love drawing, you know, the pattern of the market. So this actually drew it. Let me see if I'm going to get that and show you. What's this? So basically the roundup. I'm going to show you the roundup, so you can see what I mean. So you can see this was the trade. So this was it. So you can see this was a trade that played out. You can see how it played out. You can see the pattern here. This was our, you know, our last high. So we drew that was our target. So we knew where price was headed to. Now, time and price. London opened on Friday. So we had that structure where we had that sweep, like I explained earlier, and then we had the chalk, you know, and all of that. Whether you use this or use this, it really doesn't matter. So we have the chalk, the bullish chalk, and that confirmed the price was now ready to target this high. And then we waited during the New York session. Price returned, tagged this in, and then, you know, moved away, and then, you know, did all whatever it did, you know, and then eventually we got our target hit. And you can see all of the analysis, you know, was right there. So 128.5, you know, was banked from this trade. Okay, so drawing these patterns allows me to kind of view the market, you know, clearly without, you know, the noise of the candles, buy and sell candles at the end of the day. Okay, so that's that. So now going to New York session, we also now have something new here, as you can see, and I'm going to show you how this trade, you know, played out. So here, well, you can see that has already been mitigated, so I can just leave it there. Okay, then we had this POI here on the 15 minutes. I'm also going to show you that I also gave you know, this analysis, by the way. So now with New York session coming on board, it's either price continues to push higher or we get that pullback and then another nice entry to continue, you know, the trend. So with this, we also have here this candle here. This is also a nice area, right, for price to also return to and react to, and then we get a continuation. Now the question would now be, will price react to this zone or this zone? And that will be a very valid question, and the answer to that is that I don't know. But what I do know is that I can simply just expect patterns to play out and trade those patterns. Now looking at this, you can see here that we had this continuation chalk, and then price returned, swept the lows, gave us this low, and then, you know, pulled back again, and then gave us a continuation, you know, chalk. Now novice traders will just say, okay, based on this price action, I'm just going to put my entry around here, and I stop below this area, and then I'm going to target this high. But what you don't realize is, of course, this is not even a nice target. 1 to 2, I of course go for usually more than that. So but what you don't realize is that price, using this price action, price could just use this low here as inducement, you know, for this area below this area, right? So typically what I'll usually do is I would have one entry here. Okay, I'll have one entry here like this. Okay, using this area, this candle here has inducement for, you know, this area here. So I'll have one entry here and also another one here, just in case I get run over. This is what I would typically do. Okay, and yeah, and then target the immediate high again. Or now, if you banked opportunity, if you banked this, you can now swing. Okay, because you now know where the market is headed to. All right, so but this is it. So this basically, you know, we mark that has a very nice inducement for price to induce, you know, novice traders, and then, you know, get an entry before it continues to the upside. Okay, and also I'm going to show you, I also did give analysis about this during New York session from yesterday. So you can see, where's that? Yeah, so you can see here from the New York session, market structure is clearly bullish on the news. This is a good area to consider long. So you can see that was there, right? So yeah, so let's see, okay, so that was it, right? So with this now, nice opportunity to long, okay, and target the 4-hour high, because after all, there's nothing to lose right now, right? So let's see. Okay, and that was it. So 2:30 p.m. UTC plus one. That was it, the entry. And then you can see, price just went ahead and did this thing and hit clear 1 to 10. And that was it. So nice trade setup, nice entry, and nice everything. At the end of the day, what you're going to learn from all of this is patience to wait for your trade setups, because without waiting for your trade setup, that's where a lot of traders miss it. You take trades that are outside your setups, and then when the right ones play out, you're simply just covering losses instead of you making money on your trades. So this was it. So I also do have here, trying to put this here, but I'm just going to play this out for you. But you can see this was the trade. Actually did record it live while it was playing out. You can see that. So, but yeah, I'm going to put that also on the video for you to enjoy. So this is essentially the trade recap. If also, of course, you want to join the Stock in Profit mentorship, you have a 10% off. By the way, just check the chart. You can use Level Up and you get 10% off. But also, if you want to join the Discord channel, there's a free area where you can get access, but if you join the full mentorship, you get access to everything. So yeah, so this is it, and this is a recap of the trade. I hope you've actually learned a thing or two from this. So hey, it's been a pleasure sharing with you. Stay stuck in profit and see you some other time. Bye bye. Cheers. Right, hello. I promised I was going to do a recap of this trade during New York session, during New York session of the 5th of September, and this we're going to do now. So, let me walk you back to the morning of the 5th of September, what had happened, how I analyzed the market, and then why I also decided or how I was able to catch, this specific trade. So, to do that, I'll just take off, let me take off all of this. Okay, I think that's there. So let me take all of this off. I had drawn this in anticipation of the walkthrough. So cool. So this is what we have. So now on the 4R, let's look at this. Now something had happened actually. So in the morning of the 5th of September, I had analyzed the market and my bias was buys. Okay. So my bias was essentially longs, right? So I was looking for long opportunities, and I'm going to show you why. So we had this was the last break of structure, the downside. Okay, no, so this hadn't this was yet to form at the time. So let me just replay the candle. Okay, let's take it to this guy. Now, what had happened was that the market had been trending bearish for a while, and then the market changed from bearish to bullish. Okay, and it was based on that I was anticipating that we're gonna have a swing bullish move. Okay, and all my entries were actually sort of around the fact that okay, that was what was gonna happen. Okay, so we're gonna have that kind of bullish continuation. However, that was not to be. So let me do that again. Why is this taking a while, taking time? Okay, let's see, just a sec. Okay, so here we go. All right. So this was 2 a.m. on the 5th of September. So now, like I mentioned, this was the whole idea. You had a low, high. Okay, let me just do this. Low, low, high, low. And then after that, what do you expectedly, if we're to continue the bearish momentum, would have respected this high. Okay, why is this barrier plane not connecting? I'm sorry, it's freezing for whatever reason, but you get it. So would have respected this high and then have that continuation. But what had happened here was price completely changed from the bearish order flow to the bullish order flow. Okay, so this high was taken out, not just that high, but apologies, I'm not sure why this is freezing, but okay. So basically, price had moved from the bearish order flow, and now we had this, bullish change of character. Not bullish change of character. This was essentially a bullish change of structure, or break of structure. So, with this, my anticipation was after all of this, this pullback all the way to this demand zone. Now, price, after Sunday open and then Monday, price started pulling back. So, my anticipation was this was going to be a swing trade, right? That was, sorry for whatever reason this freezing, but my anticipation was that this was going to be a swing trade that was going to take go all the way to this area here, because this was the last high. Now we've shifted, the market has shifted from a bearish order flow to now a bullish order flow, but apparently that was not to be. So on Tuesday we had after Monday price action, price pulled back, but then we just had consolidation going into Asia session of Tuesday. Now let's see how all of that played out. So let's go to 50 minutes. Now, so you understand my philosophy going into Tuesday, that I was still looking for longs because of the swing structure on the 4R, right? So because of that, I was not considering all of this change of character, sweep of liquidity here. You can see this high, this candle here swept this high and pull back, and that led to a change of character. So I was not considering this at all as opportunity to short, okay, because of that, right? So I was still holding my longs, because I also had longs from the 4R. But let's see how all of that played out, right? So we had all of this, okay, London session open, and then the market just sold off literally. Okay, so the market just sold off, as you can see, and this was essentially what happened. Now with this type of price action, okay, that's getting too fast. Apologies for that, that was too fast. So let me just take this back, let me just walk this back a little bit. So you can see that the market sold off. This was already 11.5, so let me just leave it here. So the market sold off aggressively, okay, and that invalidated my bias. I took a loss, right, which is okay, perfect, right, in trading. Now what had then happened was, you can now see that we had, this bearish, right, structure. Price had taken out this low, and now at minimum, what would we expect with respect to mitigation? So that means we'd expect price to return to this area here, this last candle up, and then when price mitigates this after this break of structure, then we can look for an entry. And that was, essentially the trade setup. And this, of course, was not to form on the London session, but then in the New York session. So we took a loss because the swing trade was invalidated. Perfect. But now in New York session, we had an opportunity for an entry. Now let's look at the 4 hour before we come back to the 50 minutes, and then I'm going to show you why this was a valid entry. Now on the 4 hour, clearly you can see here that we now have, a continuation break of structure, a continuation bearish move, and now price has already pushed, taking out to the previous low. So with this, high momentum, and looking at New York session, we knew that New York session, for some reason, that's basically how price, moves. So we're going to have a pullback and then a continuation, okay, because of the momentum and all. So until, later on, maybe going into the new day, we're going to have, a reversal setup that we may look out for and all of that. But for the New York session, the momentum was high. We're still going to get that continuation setup. So going back to the 50 minutes, London session essentially sold off, and now price was still pushing strongly downwards, right? So we have this structure here, low taken. This was the high that led to this low taking. What do we expect? We expect a retest, essentially, right? We expect, however that happens, okay, we expect a retest of this area and then a continuation, okay, right? So this is essentially what we're expecting. So price retest this area, we look for an entry. You can either enter on the 50 minutes. Now the criteria for entry has to be that the 15 minutes gives you an entry. If the 15 minutes doesn't give you an entry, then you have no reason, for example, drop into lower time frame, for in my own case, to the 1 minute to look for an entry. So the 15-minute setup is there for the 15-minute entry, which might give us, not a lot of, RR risks to reward, but when we go to the 1 minute, we may even get an obscene amount of risks to reward. So 2 entries on the 15 minutes and then on the 1 minute if the market presents that. Now with that in mind, let's play this and let's see how the trade played out. Cool. So 12:30, we're going into now, of course, the cross between London and New York. Let's see how that continued. Okay, 1:15, and now New York session. Now you can see with New York session, a lot of momentum came into the market. The price was now pulling back, and where was price pulling back to? Price was pulling back to this area, right? Let's play the next candle and see. Okay, or before we play the next candle. Now, by the way, when I see something like this, so 2 things. One, there's already 15 minutes entry here. Okay, there's already 15 minutes setup here. This will give us 1, 2. This gave us 1, 2, 3, thereabout. Okay, now it's either you enter here at the just at the edge of the supply zone, or maybe at the 50 the 50th mark of the supply zone, whichever one works for you. But you can see with this we get 1 to 3, and then if you're looking for this, you get 1 to 7. But you have to know that if you enter in the 15 minutes at the 50, maybe the 50% mark of the supply zone, most of the time price may not pull all the way back, but that gives you some sort of buffer, just so that if you find the 1 minute setup just at the edge and you take the 1 minute setup and it fails, you may be able to recover that from maybe the 15-minute setup. Okay, if price pushes all the way to the 50% area. However, sometimes too, price can just take you out on the 1 minute and then not push all the way there. So that is why you want to sort of get that buffer, the 15 minutes. If you have structure, then you know that you're expecting 15 minutes to play out, and then with that you enter on the 15 minutes, and then you can also enter on the 1 minute. For me, how I do it is I split my risk, right? So depending on what you risk, but if you're risking, for example, 0.25% on 1 minute and 0.25% on 15 minutes in combination, that's 0.5% of your account, or depending on your your experience, if you're risking 0.5% or 1 minute, 0.5% on the 15 minutes, that's in total 1% per trade opportunity. Okay, you have two positions on the 1 minute, on the 15 minutes. If the two of them work out, fine, you're great, you're awesome. Okay, but then if one fails, the other one hopefully holds the line. So that is essentially it. So this is the 15 minutes setup. Now let's go down to the 1 minute and let's see how we'll play that on the 1 minute. Okay, so I want to believe you're getting a ton of lessons from this. If I happen to post this online and you love this, maybe YouTube or something, please do let me know in the comment section rather. And yeah, so let's see how this plays out on the 1 minute. So on the 1 minute, we're here to mitigate the supply zone anyways, right? So waiting for that. So let's see, we have this 2 p.m. And then open. Okay, so we're getting something here. All right, perfect. Now let me show you something. So with this, now I teach this in the course, so this is something that those who are on the course will understand perfectly. But we have this. You can either take this guy here, has a sweep of liquidity. So we had that, and then price failed to close above this guy, and then we had this rejection, and you can see this change of character here. So you can be aggressive and take this initial one, or wait for this low to get taken out before you decide to sort of short. Okay, so we have this. Okay, change of character there, so we can see that. So we can either take that as a sweep and all of that, or we can even take this candle here as a sweep, whichever one really works for you at the end of the day. But all I see here is just opportunity to really sell, because now what is really important here is we've established something super important before coming to the 1 minute. You have nothing to do with the 1 minute if you don't have a 15 minutes entry, and that's the simple fact. If you don't have a 15 minutes entry, you don't have a 1 minute. There's no reason playing with a 1 minute. In my personal opinion, and of course that's the way I trade and that's what I teach, right? So you don't come to the 1 minute looking for every change of character, every sweep of liquidity. No. The 15 minute needs to establish a structure. You already have an entry in the 15 minutes right before even price comes to that level. You know what to do, and then when it gets to that level, you can now go to the 1 minute to maximize the trade. Okay, you can now have an additional position, one trade where you can have two positions on the 15 minutes and on the 1 minute. So on the 15 minutes, we've already established that we have a 1 to 3. Now on the 1 minute, we want to see how can we really maximize this trade and see if we can really catch something super powerful. Okay, so with this now, we can now put our entry here, this last candle here. I'll just put that. Okay, so I'll stop above this guy. So you have this, so let's put this to 3 pips, and then we target this low. This is a 15 minutes low, so we target that, right? Okay, now extract 1 to 10 out of this trade, so put it there. Okay, perfect. So that is it. Okay, so now this is it. Now mind you, we've already seen something on the 15 minutes. We already have an entry in the 15 minutes, right? Because price has already tapped into this area, so the 15 minutes trade is already triggered. This is simply to maximize this setup, okay, and really see if we can extract more. Now we also know that what price might do is, after doing this, price might just do this and then go without tagging us in. We're not going to chase price, okay? But we already understand where price is supposed to head to. So but we're taking this based on the fact that we really just want to maximize this trade, and hopefully price pulls all the way back here and then gives us an entry. If you really just want to see that you have an additional position, you can take a lower risk to reward. That's fine, but that's good if that's something you want to do. But for me, I'm willing to really just maximize and really extract a lot more. So with this, we can then play this out, and let's see how this works out. So price left off, which is really the case sometimes. Okay, we got tapped in. Perfect. So with this now, we're active, okay, in this trade, and then we're looking for 1 to 10. Okay, so oops, it came close. That can be painful. All right, and that was it. So 1 2 10 essentially. So you see how the trade essentially worked out, right, on the 1 minute. Now this is it. Okay, this is it, and this is why trading is such a beautiful thing, right? When you understand what you're doing, you know what you're looking for, and you're willing to just put in the work and the time, to follow price and just follow the setups. Well, this is based, of course, on the stock and profit strategies that I or setups that I trade, and also that I teach in the course. So, but this is it, 1 to 10. So on the 15 minutes, 1 to 3, on the 1 minute, 1 to 10. Now usually the 15 minutes, 1 to 3 may not be a setup I would take, because I usually, even with the 15 minutes, I still want to get my 1 to 5. That's for personal reasons. So it's really not a setup I'll take, but this 1 minute, of course, because it has mitigated and then the setup was there, it's a trade, one would take. So this is essentially it. Okay, so 1 to 10 in the New York session, even after taking the loss from the London session because of the failure of the swing for our structure. But then the 15 minutes, sorry, the New York session presented opportunity based on the momentum of the market, and that was essentially it. Okay, so I want to believe you've taken a thing or two from this. You can back test this if you're watching this within the month of September. Of course, you can always backtest this. If you're watching this after that, you might have to use maybe some of the software to backtest the 1 minute, but you get the idea. You can always backtest the 15 minutes, I think, on TradingView. So, hey, it's been a pleasure. I hope you really love this. If you're watching this online, maybe on any of the platforms, please feel free to comment, like, share, and let me know your thoughts. It's a pleasure. Enjoy, and bye-bye. See you next time. Stay stuck in profit. Yeah. Okay. So so we're going to be deep diving into market structure, basically, building on what we had built earlier. I want to believe also that you've installed, TradingView, and also you've played around it. So basically, we're building on that knowledge, and also deep diving into market structure and all of that today. So to start with, what I'm going to do is on TradingView, there's something called a replay. However, what I'm going to be doing is just to show how this works. I think the replay function allows you to it allows you to sort of replay the bars. You can go back in history and sort of replay the bars and then, see how and use that, of course, to what we call backtest, backtest the data, backtest structure, and all of that. So I'm going to be using that. The free version, I think, doesn't allow you to backtest to replay bars on maybe lower time frames like the 15 minutes, which is what I'm on. I think it only allows you to do that on the daily and weekly, I think thereabout. So, but I'm going to show you how to do that using the bar replay to test your market structure. And also, I'm also going to also show you how to do that where, for example, if the trading view you're using is not a paid version, and then you just need to be able to do the same thing. So to start with, this is, you can see here, if you look down, just down below here, you see that this bar, or where my mouse is, the crosshair is around the 4th of May of this year, that's 2022. So if I'm to do this, what I'm just going to do usually, so let me just cancel this. So my trading view is just by default today's date. So you can see the last bar here, you can see was yesterday rather, Friday 22:45. That was the last bar. And by the way, this is a 15 minutes chart, what we're looking at here. So let me go to the 4-hour. If I go to the 4-hour, you can see what the 4-hour is like. You can see the 4-hour here. I think we used this earlier, our last class. So you can see the 4-hour structure here. Basically, you can see that this was a downward trending market, obviously. You can obviously see that. and then the market, changed from, downtrend, and then now we can see we're now in the uptrend confirmed, right? So we know this because we've already built on this from our last class. So let me take this this thing out here. Sorry. Want to delete this. Okay, cool. So yeah, so we already understand this. Now, when we talk about backtesting, what does backtesting means? Backtesting simply means that you're sort of replaying the bars. You're trying to confirm to see if, for example, your theory about the market works, right? That's backtesting. You're trying to gather data. So that's what backtesting simply does. So how you can do this most of the time is, for example, if you come here, look at this bar here. This is January 2022. We can decide to do a backtesting for the entire year of January 2022 on the 4-hour to understand market structure. So what we can do, for example, is say we come here, this is January. So we know that the market made a low here. If I just expand this. So we know that the market made a low here, January 28th, as you can see here, and then it pulled back up, right? And then it pulled back up a little bit, to the previous high. So this was the previous high that we had here. So if I just use this tool and I cycle this was the previous high. So let me take that stuff out. Good. So that was a previous high. So this was the previous high. The market came down here, made a low, and then reversed back up, and then came and tested this high that we had here. But it did not break this high convincingly. Of course, from this structure here, you can see on the 4-hour that the market came here, sort of retested the high. If you look at the crosshair, if you look at what we have the crosshair there, you see that it actually broke this high by a wick, right? But not by the body. So you have here by the wick, this bar here actually broke this high by the wick. So what does that tell you? That tells you that the market failed to convincingly break structure to the upside, right? So it failed to break structure, and then after it broke, by the wick, it reversed, and then you can see there was a heavy move downward, right? So this just tells us that the market failed to make, a new high, and then rejected that high, and then decided to move downward, and then it came down here and broke structure here. At this point, we now had a new break of structure here by the body now, right? Here was break of structure by the wick, but you could see because it was by the wick, and also just to state, of course, the wick simply means the all these long bars that you have the body. I think I haven't emphasized this, but I want to believe we have that knowledge already. So you have the body, this blue, I'll call this maybe like a vertical rectangle or something, or a square thereabout. So this is the body, and then all these long lines attached to the body are called wicks. So you have this wick to the downside, and you have this wick to the upside. So you could see here that the market came down here but failed to break the structure, right? And it also just broke the structure by the wick, and then it reversed up, right? And then here, this was where the market now broke this low by the body. You can see this long bar here. That was how the market broke this low by the body. So this is what, for me, I consider a break of structure, right? Now, we have two fundamental I would say tools that we always use when it comes to trading, or when it comes to looking at market structure. One is change of character. The other one is break of structure. So change of character, normally you see something like this. This may not be the best tool to write this, but yeah, you see, we normally call it chalk, right? So that means change of character. So you have something like this, and then your boss is break of structure, right? BOS. You always see something like this. So that's break of structure. Anyways, pardon my writing, right? So, but that's just that. So you have here, the market came and broke structure here. So with this, we can now see, you can just even draw a line like this. Let me try and do something here. So if I take this tool that I have here, you can see, you can just draw a line here. You can see the market came down here, made, failed to break structure here, and then came down here and broke structure convincingly. You can see that, and then it moved downwards. Sorry. Let me put this in perspective. So yeah, so let's draw this again. So this came down here, moved back up, failed to break this high. And then here it broke structure convincingly. And then you can see that there, and then pull back up a little bit. And then here pulled down, and then, was just dancing around here. Then here we can see that the market broke structure. It broke this previous high. That's a break of structure, right? But now there's what we call major structure and minor structure. Now this is a major structure, right? This move here. Now this internal move, we call it internal structure, right? Or minor structure. So this is your major structure. You had a break of, structure here to the downside. And then this, now let me do something. Oh, why is this? Sorry, this tool is not supposed to disappear. Okay. Oh, something is wrong. Sorry. The tool is not staying. Anyways, I wanted to show something. So you have here this, high, low, high, and then this low here. Let me use this other tool to draw that. I'm not sure why that is not staying. So we had this low here. Now this low is a major low, right? If I take out this, let me take out this this stuff I drew here. Yeah, so this basically was now, this is now our new lower low. So this was our previous low. When the market broke this structure, took out this low, this became our new low. Now everything between this high and this low is called internal structure. And what I mean by that is you can see here, this was our previous high. The market came down here, made a low, and then pulled back up. It didn't break this previous high, and then it returned to take out this low. Now, because this high took out this low, right, this becomes our new high, right? It took out this low, it becomes our new high, and then formed a new low here. Now, everything between this high and this low is considered internal structure. So even though we had here, for example, you could see here that the market pulled back up here, then pulled down, and then, broke this previous high, then pulled down again, and then broke this previous high. You could see here that the internal structure has now changed. Excuse me, the internal structure has now changed bullish. Now, this major structure, the major structure is still bearish. And what does that mean? Bearish meaning that the market is, basically forming new lower lows. So you can see that this was a previous high. It broke this low and formed a new low. So the major structure is bearish, but temporarily we can see that the internal structure has changed bullish. That doesn't mean that the market is now bullish. It simply means that the internal structure is bullish, but the major structure is still bearish, right? Now, I just want you to have that in mind. We're still going to be building on this. Now, you can see here that the market, of course, pulled back, right? So it pulled back, the internal structure pulled back and was a little bit bullish. And then after a while, it now broke, this new low or internal low, and now we now have, it broke the internal low and now made a new low here. You can see that new low here, and this new low here took out, this previous low. So the market has now continued in its bearish trend. That's the meaning. Now, what does this tell you? Now, this just tells you that the market, often than not, would always, go back and forth, basically. So you have, bearish movement, you have bullish movement, bearish movement, bullish movement, major structure, minor structure, internal structure, and all of that. So, but this is basically just a concept to have in mind. So here we have the low taken out, and then we have this new low here, as you can see, right? So this new low here is formed, and then we continue. If we continue down, let's see what we have here. Okay, so this basically was now the high that took out this low. And where is the low? We can see that this was the low, right? It made this low, then pulled back a little bit and made a high here, and then broke this low again. And then we now have, a new low here, right? And then what happens again? So made a new low here, pull back up a little bit, right? And then pulled down again, made a new low here, and then pulled back up a little bit again, and then broke structure, and then made a new low here. The bearish momentum basically continues, right? So this, is basically how, when you look at the entire structure, on the 4-hour since January, you can see that it was basically, a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then lower lows, basically. And then around here, this was September, we made, the last lower low. And then from here, we can see that the market now decided to change from, the bearish momentum to the bullish momentum. So here the market, sort of, made the last lower low, and then here we had this pullback up here, and then this higher low, right? And then it broke structure, broke this previous high, and then we made a new higher high, and then here it pulled back a little bit, and then here we made a new higher high. So you can see that evidently from this structure, the market has shifted from a bearish momentum, and now it has shifted to a bullish momentum, right? So this is basically the market structure. Now, how do we take this and fit this into the 15 minutes? So this is the 4-hour structure. Now let's look at how we can break this down into the 15 minutes and how we can trade this, for example. So to do that, what I'm just going to do is I'll sort of replay this. So I'm going to use this replay icon here, this bar replay. So like I mentioned earlier, this bar replay allows you to sort of break or go back in time and sort of replay what it's going to look like. So if we take this, so let me go to let me come here. So this was on the 28th of September. So I'll just click this. So it's going to just take me back and take out, all the other bars and take me back to the 28th of September. So let's see how this works, right? Okay, so we have this now. So this was the low. So here on the 4-hour, of course, we already know the 4-hour is bearish, a series of lower low, lower high, broke lower low, lower high, and then, lower low. Now on the 4-hour, we have this, right? So if I now move to the 15 minutes chart here, let's see what that's going to look like. So here on the 15 minutes, we can see we had this long wick here, but if I put this crosshair here, you can see that the market broke that low by the bar. So we have that there. So let's see if we're able to now catch this movement basically on the 15 minutes. Sorry, let me go back to the 4-hour and mark our chart properly. So on the 4-hour, let me just use this tool to mark our high, so we know where we're at in the market. So I'll just mark this. So that will be my 4-hour swing high and swing low. Now, I use a few tools, and I think it's good I also explain this so that you get this. Okay, so I normally use, this tool to sort of mark my highs. It's just a circle, and how to get that is here. So you just come over here on Trading View, the icon, you click on that, and then you click the circle. So when you click on the circle, you come here, and then, you put it on your high. And then normally, I would also take that, the same tool again, I'll click on it, and then here I'll mark, my low. So why am I doing this now? I'm doing this because this was the previous low, and then what happened? So this was, the previous low. The market broke that structure and made a new low, and then pulled back up and then broke that previous low and made a new low here. So how do you know the high that took out the low? All you need to do is you can actually just use this ruler tool and just come to this, for example, this low here, and then you just draw it up, and then the highest point that took out that low is your previous high. It's now your swing high, what we also call the swing high. So from the low, when the market takes out a low, you just draw your tool, and the highest point that took out that low is now your swing high. Right? I hope that's clear. So that's now our swing high. So we have the swing high here, we have the previous low here, and we now have our new low here. Now, everything between this swing high and this low is called internal structure, right? Anything that's happening between this point and this point is called internal structure. Another thing I love to do is I'll normally take the line, the line tool here, and I'll just, put it on the wick, put it on this last, higher high or swing high here, and I'll just tap it there. On my computer, I'll normally hold, I think, command, and then it sort of snaps it in position. So I'll just do that and then hold shift, and then it will make sure it's, a straight line when I'm drawing this. If you don't hold shift, you can see it will just be dancing around. But if you hold shift, it just makes sure that it's a straight line. So I'll just draw this like this, and then I will, choose this as my swing high, right? So let me say, excuse me. Oh, boy. Excuse me. Sorry about that. All right, so this is my swing high here. So I'll just click on this high low. Now, by the way, I know you might be asking questions. I have a lot of default templates here, and I'll be explaining this as we go on. But these are tools I've normally, I already have them as presets that I use when I'm drawing structure. So I have this high and low on the 4 hours. So I'm just going to choose that. Now, this is my, 4-hour structure. So this is my high, my swing high. And then also on the swing low, I'm going to do the same thing. I'll draw that. And also you can see that. So I'll also just choose the 4-hour, high, swing high and low, or high, low. Now, this line is going to be visible for me on the lower time frame of the 15 minutes. So I'm able to, know where I am in the market. So I have that already. Now, so this is, I believe this is now very clear. So you understand the concept of, swing high, swing low. Now I'm also going to draw from this previous low. This was the break of structure, right? So I'm also going to draw a line and then choose my break of structure boss here, 4 hours. So you can see that. Now, so this is now our structure basically. Now, you also remember I did mention that when it comes to trading the market, I purely trade pure price action, no indicator. So you just follow, the market structure, price action, and you simply just catch, amazing moves in the market. So this is very clear now. This is our 4-hour structure. So we're looking forward to now we're going to go down to the 15 minutes to see how do we now break this 4-hour structure into the lower time frame and catch intraday moves, the market moves, catch intraday opportunities basically. So this is very clear now when it comes to structure. Now we're going to be doing a lot of this because structure is basically the backbone, for understanding how this strategy work, and also for understanding how to really just trade naked charts without clogging, indicators, average moving averages, or whatever people use, and all of that. So this is really very important to really understand this. So anyway, so we have this now. So this is a structure. So now let's play this bar. But I wouldn't play this on the 4-hour. I'm going to play this on the 15 minutes. So to do that, I'm going to go down to the 15 minutes. Sorry. Oh, one more thing. Let me also just do something. So on this line also, I can just add a text. So let me just say swing high. Right. I'm just going to put that where top and then put that to the right. So I know that. The same thing here. Please just give me a minute. I'm just play this. Okay, sorry, I had to ease myself. Okay. All right, so let's continue. So yeah, so with this now, typically, with this, we now understand, our market structure. We know where we are in the market. We've marked our swing high, we've marked our swing low, and we understand that this was a break of structure. We know that the market is predominantly bearish, right? But now anything can happen. So what do we now do? So with this now in place, we have this. Now we can now go to the 15 minutes. And let's see what that's going to look like. So now on the 15 minutes, let's see. What are my markings? Markings are supposed to show here. Oh, sorry. Let's look at this again. Why is this not showing on the 15 minutes? Let's look at this visibility. Oh, I see. Okay. There's something here. So another thing, by the way, it's well, we'll be learning all of this, so you'll be seeing all of this as I go through the video. So on this line, if I click on this settings button here, you'll see that the visibility, so you have style, you have text, you have coordinates, you have visibility. Usually the only thing you need to do is maybe change the color of your line if you want a different color, or maybe if you want to add maybe some text. And then visibility. So visibility simply says, I want to see this maybe on the minutes chart. That's the meaning. So I'll say minutes. So I want to see it on the 15 minutes. That's the meaning. If you want to see it on the daily, you also say, okay, I want to see it on the daily chart. So that's basically how this, works. So I want to see it on the 15 minutes. So I'm just going to make sure that it's ticked and also the 15 minutes is in place. So I'll say, okay. And then usually when you draw your lines, if I want to set this, for example, as a template, I'll just come here and then you click on, save as, and then type the name that you want to save it as. And so subsequently, you don't have to create it again. You can just simply go there, just select it, and you simply just use it as you see fit, right? Okay, so that's that. So 15 minutes, I want to see that there. And then the same thing also with this, the swing low. Go to settings, visibility, I'll choose also minutes, and good. So now, and also the same thing with this line, I think. Yeah, I want to see that on the 4R. And also this, I'm not sure why it's not showing me this, my low point. But anyways, I have the line, so that will suffice. So let's go to 50 minutes. Okay, so good, cool. So we can now see that our 15 minutes structure is this. Let's see the high. Good. So you can see it's actually, so you can see on the 4R, it looked like a very small movement, but you can see on the 15 minutes, that's a very large movement. That's quite large. So anyways, let's just have that in mind, right? So now this is where we're at the market in terms of, this is where the candles are, right? So now with this, we know that the market is predominantly bearish, but now anything can happen and it can change bullish at any point in time. So what we want to do is to be able to just see how we can map structure and then hopefully trade those opportunities when they show up. So let me replay the bar. So I'll just hold shift and press the arrow icon. So if I just do that, so you can see it's playing the bars for me. So on the 15 minutes, you can see it's actually broke, this low here, right? But then let's just place again and see. So I'll just put this here. So you can see this is around 8 a.m. on the 28th of September. Of course, the time is UTC +1. So it's around 8 a.m. So 8 a.m. usually that will be the time I'm already awake. I'm on the chart and I'm looking at, hey, intraday opportunities that I can catch. So 8 a.m. So let's see. So with this 8 a.m. now, this has broken this low, right? So let's see what happens afterwards. So you can see it's pull back up. Again, just pull back up. Now, we can see here that this, now on the 15 minutes, we can also draw the 15 minutes structure. And what that would look like is, so let's start from this high, for example. This was the market came down here, pull back a little bit, came down here, pull back a little bit, and then, made a major move here. Usually when you see all these large moves, these are usually maybe fundamentals. Maybe a particular news came out, FOMC or maybe CPI or some data, came out and then, produced this move. So the market made this low here and then pull back up here and then made a low here, pull back up and then, continued here. Now, usually these large moves like this, can just disrupt your data. If you're looking at maybe trying to build, a structure, this can just disrupt your data, but you just have that in mind anyways. And usually when large news like this are to come out, you usually are not in the market anyways to trade. So you're always very careful. Well, we have this low and then the market returned here to the previous point and then continued, its bearish structure. And then, a new low here, and then pull back up again, and then we have, low here. You can see the market is actually bearish, right? And then we had this pullback up here again, and then this low here, and made this low here, right? So you can see that. Now, on the 15 minutes, we can see that this was our previous low, and then the market pulled back up and then made this high, and then, return to take out this low. So this becomes our own swing high on the 15 minutes, right? So on the 15 minutes, we can take this as our swing high. Now, for me, I have, a certain criteria I use to determine if, a pullback is, can be considered a swing high. And what I do is I normally expect to have at least 15 minutes, 15 pips. Now, the tool I just use is this ruler tool here. If I just click on it, the measure tool, and then I come to this low that we have here. Or before I even do that, let me just also draw out, the high points and then the lows, so also on the same page. So I'll just use that tool, swing 15 minutes. I'll choose that. And also do the same thing. This was the high on the 15 minutes. I'll also do the same thing. And then that high, this high took out this low and then formed a new low here. So I'll also do that. So you can see the structure also on the 15 minutes. So let's draw the structure like this. All right. So to the body, and then break a structure boss 15 minutes. So you can see this was how the market moved. So this high was the high that took out this low and formed a new low here. And then there was a little pullback here before it also took out this low again. And, it continues. So let me also just draw that. So the high was here. This was the high point, the highest point rather, right? And then that high took out this low here, took out this low, and then formed, literally this low here. So we can draw that. And then we can also use the line tool to also draw our breaker structure here, just so we can see that. Now, with time, you may not, with time anyways, you begin to spot this without even having to draw this, but at least this gives you an idea so you know what structure is like and also how to trade it. Now, we'll be getting to the part of how to trade this, but how to draw this is super, super important. So for me, at the minimum, for me to consider a point or a high point or a pullback, or for me to consider a move as a pullback on the 15 minutes, I'll need to see up to 15 pips. So if I draw it from this low here and I draw it up to this high point here, you can see it's 31 pips. So for me, that's more than enough. So I actually can consider that as a swing pullback, right? Now, okay, so we have this here. Now, this is where we're at, right, on the 15 minutes. Now, you can actually see that building a multi-time frame analysis, we started on the 4-hour, understanding that the 4-hour was bearish, and then we dropped down to the 15 minutes, and now we're able to draw a structure on the 15 minutes, and we still see that the 15 minutes is still bearish, right? Now, if we also draw this line tool here from this high, so we can see that this is going to be our swing high. So let's see. So this is going to be our swing high on the 15 minutes. So I also do the same thing here. This is actually going to be our swing low on the 15 minutes. Where's that selection here? So yeah, our swing low here. So this is our swing high, this is our swing low on the 15 minutes, right? Now, this is of course the swing low for the on the 4-hour. If we go back, I think we're going to see a week on the 4-hour that made this low to be so evident on the 15 minutes. So anyway, so we have this. Now we know that looking at this is our swing high on the 15 minutes. This is our swing low on the 15 minutes. So the market is still bearish until this high is taken out. If this 15 minutes bar returns and takes out this high, we now know that there will now be a change of structure. That means there will now be a shift from the bearish momentum to the bullish, movement or the bullish momentum. So let's continue playing the bar. Let's see what we have. So if I play this continues. Now, all this movement is called internal structure, right? Because this is our swing high, this is our swing low. All this movement inside here is called internal structure. So typically for me, I would want to wait, right? Ideally, I want to wait to see that this high is taken before I, now begin to say, okay, there's not a change of structure. I want to look for long opportunities. So I'll just play the bar and let's see what we have. Okay. So you can see it failed to take out this low. It almost came there, but it failed to do anything. Now, something you also notice here is that because this is our swing high, this is our swing low, this movement here, all internal movement, this was a high, and then this high was actually taken out by this movement here. So we can actually just draw that. Actually, if I'm trading, I'm really not going to do anything. If I see this, I'll just draw this just to continue to build my story anyway. So I know that this happened, and now this made a high here, return here, failed to take out this high, and then we can see it has moved back up here, and then it's taken out this high by a week. But for me to see a change of character, a break of structure, it has to be by the body. The week is not sufficient, right? The week is not enough. It has to be by the body. So let's continue and see. Let's play the bar. So this continues, internal structure still dancing around, nothing much happening there. Let's see. Continue to build. See what we get. Okay, cool. Now, nice. So now you can see that this bar now has taken out this previous swing high by the body. Now we can draw this. You can now see that this has taken out this high by the body now. So officially, we're now in, the market has now changed character from the bearish momentum like we had here. You could see this was a bearish momentum. And now because this has taken out this previous high, we've now shifted from bearish to bullish, right? So let's continue. So let's see this. So you can see the market's still pushing. Okay, it's pulling back. Okay, dancing around. Let's see. Okay. All right. Let's see what we have. Okay, cool. Now I'm going to show you something. Now look at this. So this structure here broke this previous high by the body and made a high here before pulling back. Now, remember I told you, for me, I consider a swing pullback if it's up to 15 pips, right? So I'm just usually going to draw something like this. And this is about 44 pips, right? So I actually can consider this low here has a swing pullback. So what I'm just going to do is I'm also going to take out this, circle tool here, and I'm going to put it here. And then that's my swing pullback. And then I'm also going to put the same thing here too as my swing high, right? So I know that now this high has been taken out, made a higher high here, and then pull back a little bit, and then now we've also broken this higher high by the body. So I'm going to use the line tool and then draw this like this, right, by the body. So this was, of course, the body that broke, this previous high. So we're there. Now we know that we've shifted from bullish momentum from bearish to bullish. And then now we can consider this low, this here, as our new low. So I'm going to draw using this tool, the rectangle tool, this tool here, or the square tool rather, I think. So you can actually find that here. When you come over here, you can actually find that tool here. So it's just a rectangle tool. When you click it, you see different shapes where you only use a rectangle. And I have it, of course, I've added it to my favorites, and then I can always just pull it out and use it. So what I've done now is using this rectangle tool, I drew the last candle, the last candle basically before the push that took out this high. So that was the last candle from the tip, from the week, to the week basically down here. So I drew that out, and then we have this. Now I already have my preset, so I'm going to say this is going to be my 15 minutes POI. And what that means is my 15 minutes point of interest. So I select that. Right now, what does that mean? So expectedly, I will expect that the market will come back here and then respect this strong POI and continue. Why? Because this low here, this was the point of interest, the last candle that took out this high. So I expect the market to come back here and then continue. Now, that may happen, or the market might even decide to come down here before it continues. And the reason is simple. After a break of structure, you always should expect a pullback, right? And what that means is, look at this, from the bearish momentum that we had here, you always see that after a break of structure, this high took out this low. After a break of structure, you expect a pullback before a continuation, and then a pullback and either a continuation or even a reversal. So after this break of structure here, then from this low that took out this high here, we expect, so let me use this tool. So this low here took out this high. We expect after it took out this high, we expect usually a pullback, to this zone before a continuation. But you can see that it didn't really pull back all the way down there. It pulled back a little bit and then it broke structure again and then it continues, right? Now we expect that this would also come back here, test this POI, this strong POI that took out this high and then continue, and that's how we trade the market. But now it can't do that, or it can decide to even come back here and still come and test this, zone here before it continues. But now for us, we don't predict the market. We only react to price action, right? So let's see what happens if that is actually going to happen. So we continue to play the bar. You can see it continues to push. We know that the market can pull back at any time, right? But we're not basically, predicting. We're just reacting to what market does. So obviously it's not pulling back. So this is leaving us with a large, a lot of orders here. What that simply means is that a lot of people, a lot of traders are going to open positions here because they expect that the market will pull back and then continue. So, but at some point, this market continues to push upwards, but at some point it has to come back. So let's see. So we continue to push, continue to push. You can see this is around, let me put my crosshair. This is around 22.45. That's already at night. So at this time, of course, I wouldn't be trading. So let's just move it. This is around 4 a.m., 5 a.m. I'm not trading, not looking at the market at this time. So this is around, that was too fast. Anyways, this is around 7:30 thereabouts. Of course, I'm already on the chart. So when I come on the chart, I already see that the market is already here. And then what am I going to be looking for? I know that my previous structure, this was my previous structure. I expect that the market will come down here and before it continues. It can't do that, or it may not do that, but let's see what happens. Okay, so it doesn't do that. It continues again and pull back a little bit and then continues. Now, if we draw this structure here, let's see this up to 40 pips, right? So we can actually draw this. For me, I can just draw this, but I know that this is, of course, internal structure, because this move here has refused to actually pull back. So this is still, considering this large move here, this is now our high, right? So this is now a swing high. So this is my swing low, and this is my swing high. So anything happening between this low and this high is still internal structure, right? Okay, so this here has refused to come all the way down to this point of interest, and it has, after returning here, it has changed, to bullish momentum. But now we can also draw to see what, which range is this market reacting to. And to do that, what we're just going to do is to take this, rectangle tool, and then from here, we can actually draw this zone here. You can see that. And we can draw that out here. So you can see that actually this reacted to this, there was a little pullback here, not too obvious, but you have to maybe zoom in to be able to see it. You can see the market came in here, made this high, this candle took out the previous high, this candle took out the previous high, but from this candle, there was a little pullback, as you can see here, a little pullback before the upward continuation. So this candle here, or this move here, is reacting to this zone here. So, but we know that considering this is our swing low, this is our swing high, all of this is internal structure. So now with this change of character here on the internal structure, we expect that this is going to pull back here and continue, or even pull back down here before it continues. We'll be looking at additional concepts, inducements, liquidity, and all of that. But for now, let's just understand the basic market structure. So I'll continue to, draw this out, and there you can see it doesn't pull back here. It continues basically upwards, right? Now, if I take my measure tool, I also measure this. You can see that this is up to 23 pips. That's internal structure, but of course, it's not the swing structure. So we can just take this here. What this pullback here reacted to this, this zone, right? So you can see that it's quite small, but basically this is how you painstakingly draw out your structure. So this reacted to this, and then let's see, there's a break of structure here. You can see that here, and let's see what happens. Continue to draw. Okay, so you can see it has returned to this zone here. Let's see if it's going to respect this zone. Good. So it took out, okay, it respected the zone actually, it respected the low, and then it reversed basically. So we can actually just take this rectangle tool and also do the same thing here. You can see that. Now we can continue to play the bar. Okay, cool. So it hasn't taken out this high by the body. So these are just wicks, right? It hasn't taken out this previous high by the body. So we can just, continue to look at that. Now, good. Now, two things have happened. One, our swing high has been taken out by this candle here, by the body. So you can see that it has taken out our swing high. And also, this internal structure, basically, this high has been taken out, right? So remember I told you that after a break of structure, you expect a pullback. After a break of structure, we expect a pullback, and then a break of structure, and then a pullback. Now, that pullback can happen anytime, basically, right? So for us as traders, what we want to be able to do is to be able to capture, the movement of the market, the pullbacks, and then trade those pullbacks. We'll get to the point of entry, but for now, I'm just emphasizing, on how to identify your structure, how to identify your strong POIs, your strong POIs that you can use to trade, and understanding how that forms in the market and utilize that to your own benefit. Now, we know from this, remember on the 4-hour, let me go back to the 4-hour again, just so we don't lose, our story that we're building, right? So on the 4-hour, you know that on the 4-hour, the 4-hour is bearish. So all of this movement that we're having is internal structure. Now you can see how just a candle, one single candle on the 4-hour is already a trend on the 15 minutes. So on the 15 minutes, we've already started building, an internal story that the market is already changing, it's already bullish. But now on the 4-hour, we know that this is still internal structure. Now our 4-hour structure is still bearish. Now with this, let me go back again to the 15 minutes. Now, typically, okay, let me make this a little bit easier. Typically, I'll be using two screens usually when I'm trading, right? But because we're back testing, basically, I'll just concentrate on one screen and then just utilize that to build a story. So anyway, so we see this. So we have this here, right? So this, we know our 15 minutes is already bullish. And now what are we expecting to do? So we're expecting for on the 15 minutes, we know that we're looking for long opportunities, right? So we're looking for buys. We're looking to trade, the pullback, or sorry, the bullish momentum. So now we have this high taken. Now, let me continue playing this bar and let's see what we have here. Okay. So it continues to make higher highs. It's pulling back a little bit. What time is this? This is around 7:15. Typically I'm asleep by this time. Yeah, 20. This is night. This is Asia session rather. So 4:35. You can see the time here. You just look at the crosshair down. You see the time that I'm actually referring to. So okay, 7 a.m. So by 7 a.m. usually I'm already up on the market again. And then here you can see basically what that is like. So now let's also draw our higher high. So you can see that this low was the low that took out our swing structure. Let's do our swing structure rather, I meant. So you can see that this low here was the low that took out this high. That means the lowest point from this move that took out this high, if you use your your tool, your measuring tool here, and you draw that, you can see that this was the lowest point that took out this high. So this becomes our swing low, right? It's very important to understand that. So why is this our swing low? It is our swing low because this was our previous swing high. And the move that took out that swing high, now produces a new swing range. So this becomes our new swing low, right? And then this also now becomes our new swing high. As you can see here, this becomes our new swing high. So we're now operating between this range, this high and this low. So anything that happens in between here is called internal structure. Now, the goal of trading is to be able to catch the lower high. And what do I mean by that? Now you can see from here, this was where we started having that bullish change of character. So here, this was our previous swing high. The market made a low here, and then it took out this high. Now we knew that the market has now changed bullish, made a high here, pulled back a little bit, and then broke that high, and now it has made a second higher high. So we know that the market is now officially bullish on the 15 minutes, but we know that on the 4-hour, we're still bearish. The 4-hour is still bearish, but the 15 minutes is already bullish. So after making this high, the market pulled back again and then made this high. Now, after making this high, what's our expectation? Now, that's something we call expectational order flow. We expect that after the market has made this high, there will now be an another pullback before it continues, right? So we call that expectational order flow. You must have seen this. I think this was part of the free course or the free video I did on advanced market structure and all of that. So expectation order flow, break of structure. Let me use this tool. I always like using this tool because it helps me just see where we are at the market. So you can see this high, pullback, high, pullback, high, and then we're pulling back. This might continue to pull back before making another high, and that's just it. So you can see that we're now bullish. So these are expectational order flow. So after a high, we expect a pullback, and then we expect continuation. So what is our own goal as traders? Our goal as traders is to be able to catch these lows and trade these lows. So basically, you have this break of structure here. Your goal will be to see how you can catch this low here, and then because you know that there's an expectational order flow, that after a pullback, the market will reverse to take out the previous high. So your goal is you want to see how you can catch this low and then trade it and then take out, make a profit as the market reverses to take out the previous high. So what's our expectation here now? We expect this to pull back. It can pull back here and continue, or it can pull back here to this zone and continue, or it can even pull back down here and continue, or it can even pull back here before it continues. You never know. We simply just react to price. So our goal is to be able to understand how to draw this structure first before we even begin to think about, okay, how do I now look for opportunities, and how do I now look for confirmations that I can now use to enter, trades. So we'll get to that, but let's continue to draw our zones and let this just, let this just sink in a little bit, right? So let's continue. So this is around 7 a.m. So I'll just draw this. Okay, so you can see it's pulling back. Okay, we have a wick. Okay, okay, so you see this here pulled, and actually we had this wick that actually took out this high. But remember, I told you that for me to consider a break of structure, it has to be by the body on the 4-hour and the 15 minutes, and not just a wick. So I need to see the candle close by the body. So here it's pulling back. So you can see it's pulling back. Now let me explain something. Now someone else, if for example, you're trading and you just want to see a wick and you're not waiting for the body to close by the body, what you're going to experience is that you might be caught on the wrong side of the market, because you can see it broke this high by the wick and then it completely reversed and started taking out all these lows, right? So let's continue drawing this. Okay, so here we go. I already have some structure drawn there, so you can see basically we had that there. Now, what do you see? It came to this zone and then it's reacting to price, right? So let's see. Okay. Okay. So now it's reacting to this zone here, as you can see. We're gonna be building this gradually. I don't want to pack a lot of things. There are a lot of things in terms of market structure, flip zones, and all of it, which we're gonna get to. But for now, you can basically just understand that this move back here, or this pullback here, is actually reacting to this zone here. You can see the market came here and pulled back a little bit before breaking the structure. So there's now, usually there will be a lot of orders here. Some traders, are going to place orders here, and then expectedly when the market comes into this zone, which we call a point of interest, you would have seen me use POI. So we call that a point of interest. So just POI. So say 15 minutes POI. Yeah, so you can see that 15 minutes POI. So when it comes into this zone, it reacts to that and then pulls back a little bit. So when it pulls back, we can also see we have an internal structure. Remember, all of this movement is an internal, these are all internal, minor structures or internal movements, right? Because the major structure is this low here and this high here. So all of these are all internal structures. Now, how do you know that, the structure or the pullback is coming to an end when you have a change of character? And what does that mean? You can see here the market pull back a little bit, made a high here, pull back, made a new low here, and then, completely reversed and broke this previous high. So if you take this high here and we draw that to the body, that is called a change of character, right? Now, this is a change of character. Now, what are expectations? When there's a change of character, it's telling us that probably this pullback is actually being exhausted. It's coming to an end, and the market is now ready to make a new higher high. Remember, on the 15 minutes, the 15 minutes has been bullish, right? So when you see, after a high is made and you have a pullback, and then you now see a change of character, that simply tells you that maybe that pullback is coming to an end, and then we're now ready to now target this high or even make, new higher highs. So our expectation would be that the market is now, after this break of change of character, will now pull back into this zone that caused this change of character, that took out this high, and then we can now trade it and now move and take out this high. So let's see what's going to happen if that's going to happen. So let's continue playing this. So you can see it pulls back, it's pulling back, hasn't tapped our zone yet. Still pulling back. Let's see what's the time here. This is around 23:15. That's at night. So let's see what happens by morning. Okay. Still dancing around. Okay, 8 a.m. So this is 8 a.m., right? So you can see this is around 8 a.m. in the morning. Already London time. You're already on the market by this time. So you're looking at the market. You understand where you are at the market. This is your structure. This is the zone. You expect this to be mitigated. That means price to return here before, moving to now come back to take out this swing high. So let's see what we have. Let's continue to draw the candles. 9 a.m. and then bam. Now by 11 a.m. you can see it has returned here. It has taken out this it has mitigated this zone. We call it mitigation. That means price returns to test the zone before it moves out. So usually for me, when I see something like this, by this time 10:45 a.m. I'll usually now go to the 1 minute to look for entry opportunities, but we're going to get to that. Let's just understand this structural thing first, and let's drive it home, right? Okay, so it has mitigated that. So we expect now, our expectation is that this was a change of character that tells us that maybe this pullback is getting exhausted, and now we're ready to now target, this high here. But let's see if that works. Now that can work, or it can even just come to test it, because all these zones here, you can see they're all unmitigated. That means price, after price broke structure, price didn't retest them, right? You can see price here broke structure, did not retest this zone, only retested this, and then we'll have a change of character. So this means that price can actually react to this and continue upwards, or price can actually return to test these zones that we have here. I want to believe with this now, you're beginning to understand, how these zones are drawn, why the zones are drawn, and also, how to actually use that in trading. So let's just continue to draw our bars and let's see what this looks like. So we draw this. Okay, cool. So you can see our high, mind you, our swing high is in place. It hasn't been taken out yet by the bar, by the body rather. So this continues. So let's see. Okay, this is 2 a.m. Asia time. Price is dancing around, hasn't taken out, bam. So it has happened. So our swing high here has been taken out. And as you can see here, this has been taken out, right? By the body now. So swing boss. So you can see that. Now, the lowest point that took out this high, can just use this candle to draw this. So you can see this is the lowest point. This point here, this was the lowest point. So that now becomes our swing low, our new swing low. So we can now put that there. So this now becomes our new swing low, and then now we now have this new swing range, right? So this now becomes our low, and this now becomes, this was taken out, so this now becomes our high. So you can see this around 7:45 on the 4th of October. Now, after a break of structure, what do we expect? Expectational order flow. We expect a pullback before a continuation, right? Now, I want to believe with this, you're now beginning to piece together market structure, how to draw market structure, how the lows are formed, when you see a change of character after a pullback, that tells you that maybe the market now is exhausting the pullback. It's now ready to target this high. And then exactly that happens. The market pulls back into this zone, mitigates this zone, and then it pushes up, right? Now, typically, if, for example, I'm to trade on the 15 minutes, I'll usually just take this tool. Here, we're going to get into entries. We're not talking about entries yet because I really need this to be, for us to really understand this. So, but if I was to enter this based on market structure, after I see this change of character, I'll normally expect that this zone will hold, and then I'll just, sort of enter here and put my low just below this zone here, my stop loss just below here. We're going to talk about all of this time, and then I'll target at minimum this high here. Right, I'll target this at minimum this high. So, and then what happens? You can see the market came here, mitigated this zone, right? At around, this was at 10:45 on the 3rd, on Monday. You can see mitigated the zone, danced around, played a little bit for a long time before it now moved eventually and now touched that high there. And you can see that was around 16:15 on the same Monday, right? So from 10:45 to 16:15, you can see this was a risk of 1 to 3, and what 1 to 3.5 thereabout. And what that means is that if you're risking $1,000 here, you would have made $3,000 or $3,500 with a 1 to 3 point something risk to reward. So that's a very good risk to reward, right? So this is basically how you trade the market. So first off, you have to understand how to build structure from your higher time frame, the 4-hour to the 15 minutes, and then you now wait, basically mapping out your structure and looking for the right opportunity like a sniper. All right, guys, so welcome to part 2 of the market structure series. If you haven't watched part 1 of the basic market structure course or series, you will just find it in the description somewhere around the screen. So go watch that. Without further ado, we'll be getting right into the course. So hey, get your pen, get your paper, and get ready, because I know this is going to be something that will be so beneficial to you. So let's get right onto it. Okay, welcome to the Advanced Market Structure with Multi-Time for Analysis, free series, part 2. So this is, of course, the part 2 of, a 2-part course. The first one was the basics of market structure. If you haven't watched that, I think it should be in the description, so you can just click the link and watch it, because that's going to give you a lot of foundation with respect to what we're going to be looking at today. So you're welcome one more time. So today on the advanced market structure, the whole idea of looking at market structure, the market structure gives you, the sort of clarity that you need to understand, how price moves, and also helps you to improve, your strike rate in the market, because you know where to look at, you know what to look out for, and you know how to execute when you really understand, market structure. And then additionally, when you're able to bring all the time frames together and build a story for executing, trades. So today, starting with, what market structure or multi-time frame analysis really is. So it's just about, analyzing different time frames and, with the aim of getting an informed picture or bias or perspective as to the current or future price action. So typically you would start, this would normally start, maybe at the, from the high time frames. So the weekly, the daily, the medium time frames, the 4-hour, 1 hour, and the 15 minutes, and then lower time frames, the 5 minutes and the 1 minute. Depending on how you look at the market, some persons will consider 4-hour, chart to be, or time frame to be, a higher time frame, right? So however, it really just depends on how you view the market and how you utilize this in your trading. So a typical 1 hour, 1 weekly, candlestick would comprise of about 5 daily candlesticks Monday to Friday. One daily candlestick will comprise of about 6 4-hour candlesticks, and then 1 hour candlestick will one 4-hour candlestick will comprise of about 16 15 minutes candlesticks, and a 1 15-minute candlestick is going to comprise of about 15 1-minute candlesticks. So when you look at the multi-time frame analysis, usually it starts from the monthly and then the weekly and daily, and then 4 hour, 1 hour, 15 minutes, 5 minutes, and then 1 minute. Now, multi-time frame analysis simply speaks about a sort of top-down analysis where you where you start from the higher time frames to develop maybe a bias or a perspective as to where the market is going to go or where price action is going to go. So you start from the the higher time frames, the weekly or the daily, and then you go down to the 4 hour, the 1 hour, and the 15 minutes, the medium time frames, and then to form maybe an intraday perspective as to where price is going to go. And then you go down eventually to the 5 minutes and the 1 minute, the lower time frames, to look for opportunities to execute your trade. Now, at Paruto Capital, we begin our analysis on the the higher time frames to develop a perspective and a narrative, and then work our way down to the medium time frames, to have an immediate intraday bias, and then the lower time frames for timing our trades and our execution. I just want to say that please, if this video or the previous video you've watched on this channel is really beneficial to you, please do not hesitate to just hit that like button, right? Hit the like button, hit the share button, just leave a comment somewhere in the chat section. This would help, to boost the video, improve the, the viewership also, and just be beneficial, to anyone who comes across, this video. So please do not hesitate to just do that. Just hit the like button, hit the like button, hit the subscribe button. We really do appreciate your support. Okay, so now let's talk about how the market moves. So the market really moves in a sort of up and down, up and down, up and down, up and down pattern, right? So we have an impulsive move typically, and then after the impulsive move you'd always have a pullback or a correction, and then an impulsive move or a run, and then another pullback and correction, and then an impulsive move, right? That's how price moves, right? So whether it's in the forex market, currency market, or it's in the stock the stock market, nothing really goes up forever. There's always that up move and then a pullback and then down move and then a pullback, and then it just does that over and over and over again, right? So the rally up, the rally can be called a run or an impulse, right? Then the pullback, some persons might call it correction, is just the same thing. The most important thing is understanding the concept. Now when you see an impulsive move on a higher time frame, for example this type of move from here, right? When you see this type of move on a high time frame, it's usually a trend on a lower time frame, right? That's just something to note, and we're going to see that shortly. Now on the market, multi-time frame market structure again, like I said, a lower time frame trend equates a higher time frame impulsive run, right? So you can see here that the white lines denote the higher time frame. So you can see the move on the white lines. You can see how this is an impulsive move, a pullback, an impulsive move, a pullback, an impulsive move, a correction, an impulsive move, a pullback, and then this does nothing, doesn't take out this high, and then changes character here. You can see this came down here, pull back up here, did not take out this high, and then broke this structure here, and this is a change of character, right? You already know that. So a change of character, we expect it to pull back a little bit, it pulls back a little bit, and then continues the move downwards. Now what you need to observe here is that you see the impulsive move on the higher time frame, but on the lower time frame we have a trend, literally up down, up down, up down, and just continues like that. So on the lower time frame you have a trend, but on the higher time frame that would just look like an impulsive move. So typically it will just be like a daily candle, one large daily candle, a bullish candle. But that when you look at a bullish daily candle, you have on the lower time frame, maybe the 4 hour, the 1 hour, the 15 minutes, the 5 minutes, the 1 minute, you have a lot of trends that produce that one large bullish candle on the daily. right? So lower time frame chalks are also important pointers to indicate that the trend is about to either maybe slow down or the trend is about to continue. And what do I mean by that? Look at this move here. This was an impulsive move, correction. This is an uptrending market. No doubt, you can see that, right? We're going up, but then you notice that when it came here, there was this change of character here, right? So this is telling us that this impulsive move up, this trending bullish market is slowing down and it's about to change character to the downside. And then that's what happens, right? It changes character and pulls back a little bit, continues, and then pulls back a little bit and then continues, right? Now that's how the market literally works. Now let's look at the concept of strong and weak highs or lows. So basically, I have emphasized earlier, runs on the high time frames are trends on the lower time frames. So you can see again, the white lines, the high time frames, and then the orange lines in the lower time frames. But there's also something to pay attention to. So you can see price came here, pulled back a little bit, and then took out this previous high, right? So this low that took out this high is called a strong low. And why is it a strong low? Because it did its job. It took out this high, so that's a strong low. Now this becomes a weak high because it was taken out by this strong low. The same thing continues, a pullback and then a break of structure. This is also a strong low because it took out this weak high here, right? And then a pullback again and then a break of structure. This is also a strong low because it took out this weak high here, and then it comes down here and then up and then it broke structure. Now this becomes a strong high because it took out this low, right? A change of character. So it's this was the high that took out this low, so this becomes a strong high and then this becomes a weak low, and then it continues like that, pulls back again and then breaks structure. This becomes a strong high, lower high, and then this becomes a weak low because this strong high took it out. So that becomes a weak low, and then it continues like that, right? Okay, so now on the the basis of market structure, there was something you'd always encounter or that I always emphasize, and that's the change of character. Now the change of character simply just tells us when the trend is about to change direction, right? So of course this in your trading should always be used in confluence with other indicators in terms of course price action, liquidity, supply and demand, premium discount and all of that. So you have here anyways on the chart, so you have this impulsive move and then a pullback and then a break of structure, as you can see here, right? And then we have this minor pullback here, and then it continues, and then a change of character, as you can see here. So telling us that this move up is slowing down, right? Because there's a change of character here to the downside, and then we expect this to pull back here, respect this zone because this is a strong high that took out this weak minor low here, right? So this is strong high, so we expect a pullback, but we don't expect it to take out this zone here, and then we expect a continuation, and then it takes out this, and then we expect a little pullback, and then it continues like that. Now, something you would observe is that price doesn't always have to come back to maybe a zone, right? So you can just, after a break of structure, we always expect price to pull back, but the price doesn't have to come in here. It may come, it may not. So we have an expectation that price should come in here. I would always want to see price mitigate, our zone before we even look for entries. But I won't be going into details, of course, of the entries, here. I'll touch a little bit on it just shortly. But we expect price to always mitigate the zone before we look for maybe an entry, to continue maybe the pullback or the trend. So this continues, and then we see that this price comes into the zone here, right? So this is the major, break of structure that happened here. Now we know that this is a protected zone because it took out this high here. So we expect price to go up and come back into this zone and continue the movement up. And surely that's what we have. So price came into this zone here, and then we see it moved back, and then a change of character showing us that this internal pullback is slowing down, and then we're now ready to make continue the trend as we had here. So it changed character and then pull back again a little bit, and then the move continued. So this is basically how the change of character informs us that the trend is about to change. Either maybe a rallying market is about to slow down for a pullback, or the pullback is over and then the market is about to continue its previous trend. So the change of character is a very important concept, that I think you should take note of, right? Okay, so let's look at the expectational order flow. Now you can see that the white lines are the 4-hour, denote the 4-hour, chart, as you can see. And then here, when there's a change of character at this point, because the 15 minutes, pull back and took out this low here, that's a change of character, and then a little pullback on the 15 minutes, and then it continues, and then a break of structure, a little pullback, and it continues. You'll have here a break of structure, and then that continues. But we know that this is a protected zone. And why is it a protected zone? Because price came back here, down here, and then from here it broke structure, right? So we know that this is a protected zone, so we expect price to come back to that zone, respect it, and then continue going up. But to understand how, of course, this works in the real market, so the white lines are the 4-hour the 4-hour candlesticks, and then this bluish somewhat bluish, I guess, denotes the 15 minutes candlesticks. As you can see, this is the 15 minutes. You're having lots of trend within the 4-hour, and then you have all of that movement, and then it comes down here and then changes character. So we know that now price is ready to make a move to the upside. So what do? We wait for price to come back again into our demand zone, and then for that to happen, you see the 1 hour also was now trending up and down, and then came there, and then the 1 hour changed character. Now with this, the 1 hour has switched bullish, the 15 minute has switched bullish, and now we know that every all roads point to the continuation of the trend. So we expect now, with this change of bullish change of character here on the 1 minute, we expect price to pull back again into our zone here on the 1 minute, and then we take that trade and we target at minimum we target maybe a 15 minutes supply. No, we target a 15 minutes maybe supply zone, or we can even target the 15 minute previous or the 4-hour rather previous high, and then hopefully we take it out, and then that is how you trade this. So the expectational order flow concept is to say that because the market is trending up, we expect the market to continue to trend up. So eventually we expect that this will be protected, and then we expect that all of the zones will also be protected, and then when the market does its thing, and then you have this expectational order flow that the market is going to always obey market structure. All right, now let's look at this even with more much more in-depth or much more depth rather. So here you have the bullish versus the bearish order flow, and as you can see here, the market rallied and then pulled back, and then rallied again. A break of structure happened here. We know that this is a strong zone because this was the zone that pushed and took out this weak high. So we know this is a strong zone. Now the market came down here, as you can see, but while the market was pulling back, you can see here that the market was always, after change of character here, it pulled back into the zone and then continue downwards and pull back again into this zone, and then continue downward and pull back again into this zone and continue downward. Now that is a bearish order flow, right? So we know that this is a bearish internal order flow, of course, and then it comes into this zone, respect our zone, pull back up, did not take out this high just yet, and then you had a little pullback, right, respecting the zone still, and then it broke structure here. That was a change of character, right? So this is a chalk and a flip, right? And why is it a flip? Because price came into the zone, price didn't do anything, it flipped, and then a change of character. So that's why it's called a chalk and a flip, and then the order flow continues. It pulls back into the zone, continues up, and then that continues like that. It pulls again, and then that just continues like that. So this is a bullish order flow. So essentially this is how market structure really works with respect to price action in the market. And when you understand this, you begin to think about taking out all the indicators and just focus on understanding market structure, because market structure, I tell you, it's always and will always be king. All right, so look at this example again. So the fractal expectational order flow. A high time frame run is a trend on lower time frame. I have emphasized it severally. So you see this move here on the 4-hour and then a pullback, right? And then a move here. This becomes a strong low. This becomes a weak high because of this break of structure. So we know that this zone is going to be protected, right? So we see that price, did its thing, changed character here on the 15 minutes and then continued, respecting the order flow, the bearish internal order flow, comes into the zone, and then what happens? It changes character again. So we know that now the market is ready to move up. And then what happens on the 1 minute? We go to the 1 minute, and then wait for price to come and mitigate the 15 minutes demand zone. And then when it comes in there, we look for a chalk, and then we see that maybe a chalk and a flip, or just a chalk. So we see that flip, and then what happens? We now expect price to pull back a little bit here and then continue the uptrend, right? So this is basically our bias on how we look at the order flow. So we expect that the higher time frame runs will produce trends for us on the lower time frames, and then we leverage that to execute trades according to our plan. Now it's very important that you understand that the price price action is fractal. And when you understand this, it can literally be a game changer for you with respect to how you view the market. Now let's look at another one. So market structure is always king. I so believe this. Market structure is always king. These patterns repeat themselves over and over and over again. And the more you understand market structure, the more you'll be well grounded to always be on the right side of the market. So you won't be caught on the wrong side of the market, taking trades in the wrong direction when you should be taking it in some other direction. When you understand market structure, this will become super useful going forward. So that is that for that. So we have the 4-hour upward move, the 15-minute change of character, and then the trend internal order flow. You can see that it comes into that zone and then it continues again, and then all of that just continues, and it just continues to move, right? So it just continues to follow price, what price would do. So price will do whatever it wants to do. So whatever happens on the high time frame must have already happened on lower time frame. I showed that earlier. So the 1 minute switch bullish here, the 15-minute switch bullish here, and that will now provide us with the opportunity to now continue our bullish 4-hour trend, right? So for the bullish 4-hour trend to continue, that bullish switch must have happened on the 1 minute and also must have happened on the 15 minute, right? Okay, so now let's talk about managing bias and mastering market direction. Now, the market will do what it will do. You can never say for certain, oh, I know what the market is going to do and the market must do what I want it to do. No, that's only going to hurt your psychology. Now, you may have your strategy, you may understand the market structure. You have to be patient with it and also understand that the market can choose to go any direction. It doesn't matter, how much you spend time doing analysis. The market can just decide to do anything. But the goal of trading is not to, hang all your psychology on just one single trade that goes wrong. It's rather to allow your edge to play through. You map the market the same way, you analyze charts the same way, and you've tested and back tested it, and you can see that you have an edge. All you need to do is just focus on executing your edge, and your edge will always play out. So here we can say we have this structure, a break of structure here, a change of character here. It continues downward, break of structure. And then here we now have a change of character that signifies the pullback is already over. Remember, the price came into this zone because a protected zone, because it took out this previous high, so price couldn't really do anything. So it respected that, changed character, and then boss continued, and then it came back into this zone here where we now have the 1 minute and then 1 minute change character, as you can see here, and then we have a new zone here. Now price comes in there and then begins to go up and then comes down, and then price can just go up like this, which is our expectation that price needs to do this so that the bullish trend that we have around here right? So we have this bullish trend that started around here can continue, right? So we expect that price will do that. However, price can do whatever it wants to do. So price can just come in here and then just go down and take you out. You followed your structure, which is the most important thing. So a loss really means nothing. If you followed your plan that you've back tested and you understand how it works, a loss is literally nothing. You look for the next one, the next setup, and you execute without hassles. So the market works in probabilities. It's very important to understand this. When you know this, you have peace. It doesn't matter, that you took a trade 1, 2, 3 and it's a loss. What matters is that you have an edge, and you know that if you follow your edge to the latter, you will win, always win. Then please follow your edge, right? Now, do not try to predict the market, right? Simply react or simply respond to what the market is showing you based on your plan. Don't say, oh, I think the market is going to go this way, and then you execute your based on how you think. You're just going to end up blowing, your account, or just hurting yourself. So you must stay flexible in your bias and analysis. You've done your analysis, but you must always also stay flexible. And the bottom line is that, you must stay neutral and super flexible when actually trading. Trading is going to demand a lot, in terms of your psychology. How you think is going to challenge your thinking. But if you're willing to stick and really get your acts together, get your psychology right, get your strategy right, get your execution right, and get all of these things right, I can tell you that you definitely succeed. All right, so let's look at a little price action. So here we have this price action here. We're also going to look at this on the chart. So you can see the price came down here, pull back up, and then broke structure. As you can see here, pull back up a little bit, broke structure again here, as you can see, pull back up here, and of course change character. And then we expect that price will come into this zone. It pulled down here and then broke, and took out this high again. Our expectation will be that price will also now come into the zone and do the same thing. But you can see price came into that zone and they just pushed it out. So price can literally do whatever it wants to do, right? So, and then we can have this, up move here and then down move and then up move. You change your character, a change of character here. And then we have, an expectation that price will come into this zone, and then it does that, comes back into that zone, pushes up, and then we expect that price will also come into this zone. It does that, comes into that zone, and then pushes up again. We expect that price will come into this zone, and then does the same thing, comes into that zone, and then pushes up again, right? So this is essentially the flow of the market, how the market flows, lower highs, higher highs, and all of that information. When you have this, nailed, you'll begin to see how your strike rate is going to improve, and your understanding of the market is really, really, really going to improve beyond and above anything you can think of. So you must be able to utilize the market structure to spot also fake outs, and to really just ensure that you're trading, every trade that you take is informed based on robust technical analysis and price action, right? So before we I would just want to hop onto the chart, and then we just show you, we just speak to some charts, and then we continue. Okay, right. Let's just do something much more practical. So anyways, for those of you who might not be familiar with this, this is called TradingView. So this is a charting software that I basically use for my analysis. Okay, so so this is the daily chart. I have the daily chart here at the top, and then I have here the 4-hour chart and the 15-minute chart, and then the 1-minute chart. So let's just analyze this. So on the daily chart, you can see obviously that the market is trending downwards, right? This is very clear as day, right? When you look at the 4-hour chart here, if we're to zoom, to zoom out, so you can also see that 4-hour chart, of course, has been, of course, trending downwards from what you can see here, right? Of course, there seems to be a change here, which we're going to see shortly. But then you can see basically the movement of market, right? How that has been moving for some days now. Now let's do some, some drawings on the chart. So on the daily chart, let's draw this. So you can see here the market came down, made a high here, and then pulled and broke structure here. So it took out this low, and then you can see that this was the move that took out, this previous low, right? And then the market pulled back again and then took out this low that was formed here. So we can draw a line there. Let's do that. Right, so we see that, and then it pulled back a little bit when it came down here, pulled back a little bit, and then took it out again. So we can also draw another line here, So that's a break of structure, and then it continues, right? It came down here and then made a new low low, and then pull back a little bit and then broke structure again, and basically continued its bearish move. So we can put that there, and then it continues. And here again, the market made a low here and then pull back up and then broke structure again. And then what happens? You see that? So this was the high, and then it broke structure, and then it seems the market now started reversing. Okay, so this is the daily chart. So we know from this that this is a bearish trending market. If you have to look at this, so if you just look at this was the high. It broke structure, made another lower high, and then broke structure, made a lower low, and then another lower high, and then broke structure, made another lower high, and then broke structure, made a lower high, and broke structure. Now what do you observe here? The market basically trends or moves this way a lot of the time. Of course, it trends, either trending bullish or trending bearish, and sometimes it ranges, right? By range, I mean sometimes you just see the market like moving in a certain range like this, right? But most of the time, of course, you might see the market, you might see, you'd experience trending markets a lot of the time. Anyway, so you can see that. So from here, we see that what happens. The market here made a low here and then pull back up here, but then doesn't take out the previous demand zone, this low, and then it made a new higher high, right? It broke the structure here, right? That wasn't the best of drawing. So it broke the structure here, it took out this high, right? So that simply tells us that the daily chart has changed character, right? So in terms of our expectational order flow, we know that we're not looking for shorten opportunities majorly, right, based on the concept of change of character and break of structure. So seeing the change of character in the daily, so we're expecting that the market is going to pull back a little bit to this demand zone and then continue upward, and exactly as you can see, that's what happened. It then breaks structure again around here. Excuse me, right? So this is basically how the market moves, right? Now let's analyze this on the 4-hour chart. Okay, so on the 4-hour chart, here, as you can see, I have that here on this side of the screen. So you can see on the 4-hour chart, the same thing also was happening. So by the way, all these lines I was drawing, you can observe them. You can see all of them showing up here, right? So on the 4-hour chart, we also had the same thing, something similar, right? So now, mind you, a move on the daily, right, is a trend on the lower time frame, right, on the 4-hour chart. So the daily is a higher time frame compared to the 4-hour chart. So a single move on the daily, it's a lot of trend on the 4-hour, and that's what we see here. So you can see the market here, pull back up and then broke structure. You can also take note of the position of the cursor. You can see it's also showing the same position on the daily and also on the 4-hour. So it took out this low, right, this broke structure, and then it pulled back up again and then broke structure, and then it pulled back up again and then broke structure, and then it continues like that, right? Now with this, let's look at something. So this is of course on the 4-hour. So you know that of course this was a downward trending market, but then let's look at how the 4-hour changed character. Now if you remember during the when we're going through the slides basically earlier, I did mention that of course a trend on the higher time frame, or rather a move or a run, an impulsive move or a correction on the high time frame, of course, is a trend on the lower time frame. Now on the lower time frame, basically you can see a lot of movement compared to your high time frame. So let's see how the change of character, the first change of character really happened on the 4-hour, right? So let me take that out. Now you see this was the low. If you also take note of the position of this on the daily chart, you see on the 4-hour chart, this was the low, right? And then what happens? Now this was the high that broke this low to form this new lower low. So but you see this was what we had, and then this pulled back a little bit up here and then returned, or pull back, right? It didn't take out of course the high, and then return, and then what happens? And then it takes out this high that was formed here, telling us that of course now there is a change of character on the 4-hour. If we're to draw that, I'm going to draw that from here, right? So this is what we're going to have. So this is basically telling us that there's a change of character on the 4-hour. right? And if you look at the daily chart, you can also see where that is on the daily chart, right? So that's a change of character. Now, what you'd also take note of is that, before you have a major change on a higher time frame like the daily chart, it must have happened, in the lower time frame. So the 4 hour, the 15 minutes. So the 15 minutes, the 4 hour must have changed character before you even see that on the daily time frame, right? So anyways, you see that here. So you can see a lot of movement here. If we're to zoom out, and then look at the candles, exactly what we have here. So you see that. Let me just add something here. So this was our low, on the 4 hour, and then you had this move up here, and then it pulled back a little bit, and then it broke structure. So with this, we now know, because of this move here, this move and then pull back, and then this break of structure or change of character in the 4 hour, we know that this becomes our new low, right? So we mark that, so that becomes our new low. So we know that this was our high. This is now a new low because it broke this previous high, and then this is now our new high, right? So we can also mark that point, right? So we can continue to do this, and then it pulls back down again, and then respects, of course, this zone, and then forms a new low, right? And then it breaks structure again to go form a new high over there. So we can just mark that, right? So you basically see how the market moves, right? How the market trends, basically, and how it also changes character from a bearish to bullish, or from a bullish to bearish. So let's look at this move. Let's just draw using this tool. So this was a move, and then it returned, and then it broke structure, and then it returned, and then it broke structure, and then that's how it continues. Now we're around here, so we know that because this is a bullish trending market, our expectation is that the market will continue to trend bullish. However, the market, of course, can decide to do whatever it wants to do, and change, character from being bullish to bearish. If it takes out this low, for example, then we know that, okay, if this happens, then we know that the market is about to change character, and then our expectation is there to pull back a little bit into this zone here, and then continue downwards, right? So that's our expectation. However, we know that, of course, on the daily chart, the market has already turned bullish, so we're expecting that bullish run is going to continue, but it doesn't have to, right? Okay, so enough said. Now, this is a 4-hour chart, so let's look at how this translates to the 15 minutes chart, right? So let me just take this section. Let me just take it from here. Now, obviously, you can see on the 15 minutes here, the market. Let me just zoom this out. So you can see that the market, of course, pulled back. This was trending downwards in the 15 minutes, and then trending upwards, and then it reversed. So let's just expand this 15 minutes, and then we just look at possible entries, and what it's going to look like. So here we have so this was like November 22nd. So we can see here this was a massive move downwards, right, on the 15 minutes. And then what happens here? The market made a low here, made a high here, made a lower low, and then what happens? It broke structure. So let me draw from here to this body of the candle. So, and that move that fueled the break of structure, this was the low that fueled that break of structure. So our expectation is that the market, after breaking structure, will pull back into this zone, but it does not have to. It doesn't have to. But also we have other zones. So the market pulled back a little bit up here, and then pull back, and then before it broke structure. We can draw other zones, something like this. And then you can see it came in, tapped in here, and broke structure. And then what happens after it breaks structure? So we know that now the market is trending bullish. So our expectation is that after it breaks structure, it will pull back into this demand zone before it continues, the upward movement, right? So you can take the range, you can take, the last candle down and all of that. So let's just take this range. So we have this. Now the market, pulls back in here, and then our expectation is that it's going to continue upwards. So let's see if we're going to see an opportunity here. So I'll just play this candle back. So let me just take this out. So now, good. So we have this. So we've seen, of course, a change of character. We've also seen the break of structure. So what do we expect? We expect the market to pull back into our demand zone, and then we look for an opportunity to trend, to take the trade rather, and push it higher, right? So let's see what we get. Okay, so we've tapped into the zone. So I'll just go into the 1 minute. Okay, so this is a 1 minute. So I'm going to now look for, an opportunity on the 1 minute to see if I get an opportunity to take the trade to the upside. So let's see. Okay, so good. Okay, tapped into the zone. I've now seen what I'm looking for. Good. Now I've seen something. Let's see. So here you can see that the market came tapped into the zone, pulled back a little bit, danced around, came here, pulled back a little bit, and then tapped into the zone again. And then here you can see it's pulled out. So if I'm to draw this, I can see here from this candle, okay, it really didn't give me an entrance. So this was, a move, not really a reaction I'm going to take. So let's see. Okay, so let's go. Good. Now I have something. So you see here from this high, right? If I pull this across, you can see that the market came here, tapped into that zone, that previous high, pulled back a little bit, and then, pulled out again. So let's see if it's going to break out, take out this high here, and then we're going to have, an entry. Okay, good. So we see here that now it has taken out this previous high on the 1 minute. Okay, so based on how I enter the market now, because I've seen this, I've seen a flip, it has tapped into mitigated or 15-minute zone, and I see here it pulled into the 1 hour, the 1 minute supply zone, and then there's now a supply to demand flip, right? So there's now a flip. So it pulled into that, tapped into it, it flipped, and then broke structure. So what I'm gonna do, I'm gonna draw this tool here and take this last move downwards before it broke structure, and then I'm gonna take that whole candle. So with this now, my expectation will be that now the market is gonna come back into this zone and then push up. So let's see if that happens, right? So you're gonna take something like this. All right, this is just an example of how potentially gonna trade this, right? So let's say with this. So with this, I know that at least I'm gonna aim for this high at minimum, right? Or a fixed maybe rate, whatever it is that you trade, or however it is you trade. So let's see what happens. So if we get tapped in, okay, so let's see. Good. Ooh, we got tapped in. Yeah, you can see that we got tapped in. It moved out and then took it out. So let's see what really happened. Okay, so it came back again, into the zone, which is okay. So let's see if we get an opportunity to take this out. Okay, so nothing really here of interest so far, except it takes out this high. So let's see. Good. Okay, so we have something here. So I'm going to draw this. So this was the high, right? You can see that the market, came in here, made a flip, and then, broke structure. It took out the high by a week, which is okay, based on how I trade. So I'm going to draw, this last candle that went down, and then look for an opportunity to take this, up. So let's see if we get an entry, all right? So this, let's see if okay, I think something happened here. So this was too fast. So this was the candle actually broke the previous high by the week. So for me, I'm okay to just take that. So this would have actually already tapped me in, and let's see if it just continues, and then bam, there we go. And then let's see. Okay. Yeah. Let's see when it hits. Taking a while, returning. Okay, this is a 1 to 7. So let's see if it's gonna give us an entry or it's gonna take us out, right? Okay, this is already late in the day, but yeah, good. So anyways, it still went and hit our target, I believe. Yeah, so I think, yep, it hit the target at about 1 to 7, right? So yeah, so basically this is how to look at the market. So remember where we started from. We knew that the market was trending up, right? It broke structure. So we expect that the market will pull into this zone and then give us a move out. So the first attempt we made, that was a loss, which is perfectly okay when it comes to trading. But we saw our pattern, we saw our setup, and then we took the trade, which is perfectly okay. Our stop loss, of course, was tight, and then it took us out. But then we looked for another one, and then we took that. You can see here, you don't panic. If you have your set zone, and of course your psychology is intact, you wait for your setup, for your TP to be hit, and then you take your trade. And basically this is how you look at the market, and this is how you trade the market. So I hope you learned, something from this, and you have a lot to take home, based on all that we've looked at. All right. Okay. All right. So yeah, I want to believe you actually draw, a ton of lessons from, the walkthrough. Now, the most important thing you have to draw from this is this: consistent actions, consistent setups, will lead to consistent results and success. Trading is an art, right? And you have to understand, the intersection of profitability and probabilities in the market. From the trade I took, you saw that the first setup, ended up as a loss, but the second one gave us, a win, right? So you must understand that if you map the market correctly the same way every single time, right, eventually your edge is going to play out and then you would have success, right? And then what you just saw was how to go, from a higher time frame, from the daily to the 4 hour to the 15 minute and then to the 1 minute, and execute your trade. And you have to look at that, how I map the market, the same way every single time. If you don't see your setup, you don't take the trade. If you see your setup, you take the trade. So this basically is just to emphasize, that, the weekly, of course, gives you a very long-term bias. We didn't even look at the weekly, but the daily also gives you, a long-term bias. It's a higher time frame, and then the median time frame is the 4 hour, and then the 15 minutes gives you an immediate bias, and then the 1 minute gives you, your trade entries and your execution, right? So a few important questions you always want to ask yourself. One is, what POI, is the daily, likely to turn? On the daily, you're looking at what POI is a 4 hour likely to react to. On the 4 hour, you're looking at what POI is a 15 minutes likely to bounce from. And then on the 15 minutes, you're looking at what intraday POI is worth considering for trade entries. And on the 1 minute, you look for your setups, like we saw, the flip and the chalk, and then we took the trade literally. Now, hopping across time frames without sticking to specific schedule would only hurt your trading. So you have to find your mojo and you have to stick with it, right? Now you have to sharpen your edge, and that's what Paruto Capital aims to provide for you. How to sharpen your edge, how to short of the market and get an unfair advantage in the market. So literally everything you need to become a successful, consistent and profitable trader. We have the monthly memberships that is really affordable, for you. Now you get access, of course, to the full stocking profit course. You have, access to see how we take minimum of 1 to 5, RR trades, and the full access to trading floor, a systematic and mechanical approach to trading, pristine clarity, on what trade setups to look for and to take, exclusive access, to Paruto Capital service, easily pass funding challenges, and of course, an opportunity to also become, financially independent. The reality is that's a reason why you're here, right? And then you can also go from 0 to 6 to 7 figures in funding and even more. All this is possible when you find the right methodology and you're able to stick with it and have and inculcate that discipline into your daily routine to see the success you want to see as a trader. So you have access to the course, the trading floor, and Paruto Capital service. All of this, at an affordable, cost, right? And at an affordable price, literally, and you get all this benefit. So hey, what are you waiting for, right? There's literally, I think, nothing that should be holding you back. You would see, of course, some coupons in the description section, that you should utilize, to get, discount when you check out and also when you decide to join. So imagine your life, how your life can change if you have the discipline to stick to your plan. Most traders don't have even a plan, not even talk about the discipline to stick to a plan. Imagine if you're confident in your setups and you traded mechanically, no emotions. You just look for something that that should be there and you take it. Let your edge play out. Imagine if you had access to funding and you could have 5% 10% return on maybe 300k 200k, what that could mean for your life. Imagine you could trade from anywhere without going to an office. Imagine you could also eventually quit your 9 to 5. Of course, not immediately. It's going to take some time depending on your own commitment, but imagine if you could do that. Well, that is what Paruto service, Paruto Capital, is going to offer you, and our goal is to help bring those dreams to reality. So I've said so much. And I don't want to say so much again. So just do the needful. Just in case you haven't subscribed, please make sure you subscribe. Make sure you hit the like button. Make sure you also support us, share, and leave a comment. Ask questions, and hopefully we'll attend to those questions. So this is me to you, and this is me saying, hey, I wish you all the best, and I wish you success, and I look forward, to sharing more with you, and to also see, to hear more of your success, as a trader. So thank you so much for listening, and I wish you all the best. All right. Bye. So with this, I want to believe, you've been able now to, deepen your understanding of the market, the structure of the market, multi time frames, combining different time frames to really, put together your story on how to trade the market. So my hope and my belief is that you utilize this, in your trading, and you would begin to see the result instantly. So hey, to your success, I wish you all the best. All right, so welcome to this review. Let's go through, all of the the trades that played out during the week. So starting from Monday of the 14th of August. So today's the 18th. So right here, you can see this candle. This is already 14th of August. So let's draw out the 4-hour structure here. So here we can see clearly we have a break of structure to downside. Okay, and then what do we have? You can see here there's a sweep of liquidity. Price failed to close above the previous high essentially, right? So we have that, and the price seems to be pushing down. So essentially with that, we know that this is the low, since price failed to take out this high. So we expect the price is going to return, take out this low. So this is where we have the money. Okay, so the money is here. So essentially with this, we know that price should come here. However, with all of the price action happening here, you can see here, first off, we had, let me draw this, we had this pullback, failed to close, push down, then a little pullback here, and then we had this push up which failed to close, price returned. After that, flipped around this area, and then push down. So price right now we're expecting is going to take out this low, but before it does that, it may pull back, before we get that continuation, right? So we're very clear with market structure, and we're very clear on what price needs to do. So let's go down to the 15 minutes. So on the 15 minutes, let's see what we have. So on the 15 minutes here, we also have clear structure. So let me just draw this. So we have here boss, and then we have this low. Okay, this is the low now that we're expecting is going to be taken out on the 15 minutes. So that's so we're clear with respect to that. Now we can see also that this high, okay, this is the high that wasn't taken out. So we have there, you can see also price failed to close above it. So that's a sweep of liquidity on the 15 minutes, right? So we have that clearly in place. Now let's zoom in to where we are at with respect to price. So here we know a few things, right? So we're super clear with respect to structure on the 4-hour, and now on the 15 minutes we're simply just trying to look for where price, the right entry point, so that we can sort of time the market. Okay, so this happens to be, let me zoom in so we can see really clearly. So we have a few areas the price can react to. We have this guy here. Okay, price can return to this area and react to that. We also have this. Okay, price can use all of this area, has liquidity to tap into this area. So if you look at this, we have here, okay, this internal eyeballs, right? So I'm just going to use, do I have an eyeballs here? I do, but I'm not sure if I've updated that. Anyways, I'll just use a chalk, but that's an internal eyeballs. So we have that. Okay, and if you look at the pullback, that's about how many pips? Let's say that's about 29 pips. So it's a very the pullback is substantial as far as I'm concerned, and price can sort of really just push into that area. So here we have a sweep of liquidity. also in the 15 minutes. So that improves the confluence, that increases the strength of this POI for me, because you can see price sort of pull back this blue candle, and then price return to, sweep the highs of that candle and then continue downwards, which led to this internal eyeballs, right? So price has failed to mitigate this, so we may have, that situation where price sort of taps into this area before we have that continuation. We're very clear on the direction of the market, right? We know that in terms of the trend is bearish. We've established that on the 4 hour, and we already know that this is where the money is at. So price can just sell off or price can return. So right now, based on what we have here, we have also a few continuation eye bosses. So let me just show all of that. Okay, so just show this guy here. Okay, this was around Sunday open, market open in the week. So we have this. Now all of these areas are possible reaction zones. Okay, no doubt price can react to all of these areas. Okay, but what would determine if we take a trade from these areas? Okay, we need to see certain things. So one, we need to see, for example, is it going to be I think I change this to, yeah, I changed the color of this guy, so that's now my 15 minutes POI color. Anyway, so now based on this, right, so we're expecting that price is going to price could tap into this area and then sell off, or price could use this area as inducement to this area and then this area before we get that sell off. Now how do we determine where we're going to take our sells? Okay, because all of these areas are all POIs that are actually possible areas for price to react to. And by the way, I think I have something I need to put out here. Okay, yeah, Monday. I need to be able to catch this, but the background should be black, right? And the border should be white. Yeah. What else? Text should be white. Okay, so I think all right, I think that works. Okay, so we're going to use this to record everything we're going to be doing. So let me make this 14. This is a bit bold. Okay, so keep a record of our setup. So we're very clear on this. So for me, this is high probability POI because of the sweep of liquidity. Okay, and that was Friday of the week before. Now this pullback here is not up to 15 pips, and that is why it may not necessarily be a strong area for price to react to. So price may actually use all of this as confluences. Okay, so what do we want to see? So let's just play the candles and take it to 8 a.m. That's what we have. 7:30 and then 7:45, and then there we go, 8 a.m. So you can see prices now, we had here this continuation bearish eyeballs, right? Okay, but then you can see prices sticking out this high and it's now returning into this area. Okay, so let's play this. Okay, 8:15, we're getting that. Okay, price has violated this guy, so we take it out. Now by the way, like I mentioned, I wouldn't take a trade from this area simply because the pullback is not 15 pips, and they're just standard. Okay, so I wouldn't even take that trade. So let's look at this now. This pullback here also was around 13 pips, so that's something that I may not take, or that sometimes I may actually consider that, because London open, I know that price might just pull back and then we get that continuation. We're very certain we're not looking for longs, we know we're looking for shorts. That's the major trend. So the question is, where would price give us that continuation setup, right? And that's what we're looking for. So two things I'm going to do. One is I would likely enter here, okay, because London's opened this around 8:55, and then we've swept all of Asia's high, and then we can get that continuation reversal. So I would have something like this. Okay, that's my target, so I'm very clear on that. So I'm gonna have two entries. One is this and one is around this area, because, and the reason for this is simple. I know that if price fails to take out, if price fails to, so let me just expand this. So if price, fails to respect this area, and then pushes, into this area, then I should be tagged in and then get that continuation. The target needs to be very clear first. So that is the first thing. So if the target is clear, we know what we're looking at and we know what we're looking for. So let's continue to play this and see how this played out. Okay. All right. So there we go, 12.15, and that was it. So you can see that this was the area price reacted to, and we didn't have a need of this. So this essentially was 1 to 6.9, so we can say 1 to 7, thereabout. So this was okay, you can see this around 215 already. So this was the first trade for the week. So that it's what now, how to record this again, let's see, plus 7 hour, right? Yeah. So that was it. So that was the first trade, right? I think I should have this somewhere. Okay, anyways, plus 7 hour, right? So we have that. So with this, price has arrived at our target clearly, as you can see that, and we're good. So let's go back to the 4 hour and see what we have there. So on the 4 hour too, we're very clear on where price was likely to be drawn to based on structure, and you can see price will be that, and we got our entry. So that's simply that was simply the trade for Monday, right? And then after a break of structure, what do you expect? You expect a pullback. Okay, it was already in New York session, and you can see price just extended, continue to sell off. 4 p.m. Okay, now this is around having this chalk here, kind of 5, and then by 5 I'm not looking for any trade. I close for the day and I go to the next day. So let's go to Tuesday. So essentially on Monday we only had one valid setup, right, based on the stocking profit strategy. So 7.45. So now let's analyze this. So we know that we have on the 4 hour a break of structure. After a break of structure, what do you expect? You expect a pullback. Okay, so we have the low here, this is the low, and then we have the high, right, that led to that low being taken out around that area. So we know that we expect a pullback, and as a pullback, we're interested in trading the next day. So let's see if we get that structure on the 15 minutes. So here on the 15 minutes, clearly we have this, okay, that chalk, and then you can see here we have this as now the high. After the chalk, we registered that high, price has pulled back. Now if price is actually going to pull, continue, if the pullback is going to continue, then we should have a setup that allows us to sort of trade into take out this high essentially. So with this now, let's see what we have. So price, after registering this low here, we can see high, low. This high has been taken out, chalk. Okay, so we have that, and then we have here too this high, we have chalk here. So this is 7:45 a.m. So two things: one is that price could return to this area, and then we get an entry, okay, to the upside, or we may get an entry, or we may decide to be very conservative and try to protect this lows, right? So that's also something that we may want to do, but we know that this is where our target is. At the same time, we must also bear in mind that this is also a possible POI for price to return to, right? So we have to draw all of this out. So this area, you can see price is reacting to this internal candle, okay, and we have a series of bullish. So we have bullish order flow clearly in place here, right? So this is basically we have all of this. So this is clearly bullish order flow, but we also bear in mind that after this initial change of character, price can take all of the liquidity line below this area, tap into this area before we get that continuation. So we have to be very mindful of that fact. So let's play this out. Okay, sure, take this out. Okay, price is returning, as you can see clearly. Now if we look at all of this pullback here, This is about how many pips? 14. This is about 10 pip, not much really. So simply just ignore sincerely. 8.5. There we go. 9.15. Okay, price now is pushing up. Okay, 9.5, and that is it. Price has already come close to our target. Okay, and that is it. So essentially no trade based on this price action. So this is 11. This is what now? This is 11 or 10.45, right? So we just play this out. Let's see. So price is pulling back. So let's just play this to New York session and see. Oh, cool. Now we'll play this to New York session. Okay. So New York session, this was, definitely news, right? So now let's look at where we're at with respect to the 4-hour major trend. We know that on Monday we had that break of structure, right? And that break of structure eventually led to this low being taken. Now after this low has been taken, what do we expect next? We expect a pullback, and it's the pullback that's essentially playing out. So the pullback, we expect this to pull back to the equilibrium of the 4-hour range, right? The fib tool here. So we expect this to pull back here. That may happen, that may not happen, right? But that is an expectation in terms of structure. So let's go back to the 15 minutes and let's see what we have. Excuse me. So on the 15 minutes here, you can see clearly price is pushed down, right? And that tells us, something from this we can deduce sort of that, price is slowing down in terms of, the strength, right, to push up. So we have here, bearish change of character, right? So price is pushed down, price has tried to push up, but that has failed to really happen. Okay, so we have this unmitigated area now. Because it's a counter trend entry, for me this is already a lot of move into the opposite direction, into the counter trend, and I'll be very, very careful in trying to search for entries to continue to push this to the upside. So rather this sort of bearish push with all of this liquidity swept might just, for me, I'll just begin to look for sales, because this is basically an indication for me that, hey, price is slowing down and now price is ready to take out this low that we have here, or at least tap into this area. So let's see if that works, if we get an entry. Okay, so let's make this 9 pips thereabout. Okay, then let's tap just above this area. So that'll be 1 to 5. So let's see if at all we get something. Oops. So that's it. We got taken out. So first loss for the week. So let me update this. Where's this guy? Okay. Oh, sorry. Let's just play out the entirety of the let's get to the end of the day, right? Then we'll decide that before we register our trade. So you can see here the price now is pushing to the downside heavily. Okay, so this was already a loss, so let me just move that out of the way. So here we have, after price took out this high, now we have here a break, change of character, still to the downside. Okay, and with this now can put entry around this area, high, I'll stop right above this area. Okay, and we target this guy. This is 1, 2, 4, 9 thereabout, right? So let's see. So already 3. Okay, 3.5. Okay, what's end of D for us? So let's just see what we get. All right, into the night, and then when do we get 2 a.m. Okay, so basically our target is yet to be hit, and it's already Wednesday. So now a few things. So we have an open trade, okay, and then this low hasn't yet been hit. Okay, so for Tuesday we can just put here -1 hour. Okay, and then we have a pending trade, right? So we're going to see how that plays out Wednesday. So now Wednesday's here, so let's analyze price, and let's see what we've got. So we have here this, no, here you can see this is a sweep of liquidity. Oh, interesting. So you can see here that with this, actually, now let me also just see something here, something interesting here. Now with this type of price action, our target should actually be, shouldn't go beyond this level, and the reason is simply because we have this sweep of liquidity. So price can simply just come around this area and sort of, since this is a sweep of liquidity, so price will just respect it, and then we can get that reversal to the upside. So that's actually something to bear in mind. So but in terms of how this trade played out, this is actually the target. So 1 to 3 or 1 to 4 thereabout. So this will be plus 4R about. Okay, so that was essentially the outcome for Thursday trade, okay, based on our strategy. Now this is 7:15. Here we have a sweep zone. So price tapped into it, failed to close below it, and here we have a series of high bosses. All right, so I have a series of high bosses, and then at the same time, of course, we have here change of character to the downside. Now something that is super important to understand is that because of all of this series of sells, we may now have, okay, this is basically just price building up that momentum for the continuation to the downside. Okay, because remember, on the 4 hour is predominantly bearish, but we're having a sort of pullback as a result of, after the break of structure, we expect that pullback. However, that pullback seems to be taking longer than usual, and sometimes it's an indication the price is just ready to push down, okay, instead of continuing to push in the opposite direction. So we have that in place. So we have a few POIs. So one is this guy here, okay, so that's one there. Yeah, that's even the major POI actually. So let's see what happens, right? So 7:15, 7:30, okay, 8:15, okay, price is pushing into this area. Now if I really just want to be aggressive, I'm just going to put an entry here, put my stop loss around this area, or if I want to be aggressive, I'll put my stop loss around this area, right? So, and let's see, and then I'll target, now with this I could target the low of the 4R. That means this guy here, okay, or if I want to be conservative, I'll target this low here, but I'll target that. So let's see how that played out. Okay, so you can see price just left without tapping this in, and that is it. Yeah, so by the way, sorry, that was fast, but look at this price action here. So we had this, price did not arrive at where we wanted to enter. We could have been more conservative by doing this, but then we'll have less RR. That would have been like 4, but wanted to get more, right? Yeah, a little more. But with this now, we could actually have traded New York session. So you can see this New York session continuation. So we have this high above this area, and then we can now target the low. Okay, so that's still 1 to 4. So this would have actually tagged us in during New York session. So this a very valid entry setup based on our strategy, and that is it. So 1 to 4. Okay, and that's Wednesday. So on Wednesday, this entry, London session did not work out, but then this entry, New York session worked out just fine with our stop above this area. So that's 1 to 4. So we can update this. So Wednesday plus 4R. Okay, now I'm just explaining the logic behind all of these trades. You can see that all of the trades have, there's a logic behind them. So it's not just blind, okay, market is going to go this direction, we take this trade. No, there's always a logic. Okay, based on so and so, this is what is likely to happen. So based on that, we now place, our entries and take a position. All right, So I hope this is something that's really beneficial to you. Okay, so this is no trade. This was a valid trade, 1 to 4, and that is it. So what do? We go to the next day, Thursday. So we're almost at the end of the week. Oh, that's too fast. So now here we are, Thursday. So this was 9:30. Well, let's look at what we have here. Okay, so first off on the 4 hour, let's look at the 4 hour. Okay, so now on the 4 hour, we now have another range to deal with. So here we go. So we have here the boss on the 4 hour. Oh my, sorry. We have here the boss on the 4 hour. Okay, and then where's the high that led to this low being taken out? The high is this guy here. So we have that, right? And then we now have a new low. So our new low is here. Okay, cool. So with this now, we have a new range. So this, our low be around that area, and then our range will be this guy here. So this is actually our new range on the 4 hour, right? So after a breakout structure, what do we expect again? Like clockwork. Literally like clockwork. After a breakout structure, what do we expect? A pullback. Simple as that. And then what do you want to do? We want to trade the pullback, okay? And they want to trade the pullback maybe to this area or maybe not, okay? Now it's a pullback, it's a counter trend, so you always want to be conservative with your target. You don't want to swing it like it's a pro trend entry and you say you want to get a lot from it. No, so you have to be conservative because it may pull back deeper, it may not pull back deeper, and this is a classic example. After the breakup structure, you can see price did not really get anywhere to the equilibrium, and they just continued trending downwards again and gave us another breakup structure. So if we're targeting the equilibrium, we have to be very conservative because price may not get there. Okay, we're clear. Now let's go to 15 minutes. So in the 15 minutes London open, another thing you have to also pay attention to is the open of the market. Okay, the sessions, when the sessions open, that's when you get that volatility that comes into the market. So here we have on the 15 minutes, let's look at the 15-minute structure, by the way. So in the 15 minutes you can see we have beautiful structure. Okay, so you can see basically lows taken, lows created, sweep of liquidity, created another swept to this low here, pull back, we have another low that was now taken out, and now what do we expect? We expect a pullback and then a continuation, as simple as that. All right, so that is essentially what we expect. So how do we now trade the pullback? That is the main question. So here you can see that after 8 p.m. Asia session, eventually we had a change from bearish to bullish. Okay, so we got that. So change from bearish to bullish, and you can see the time. This is around 9:30 a.m. So this was basically 6:45 a.m. You can see that by 6:45 a.m. price pushed, created a breakout structure. So what do we now expect based on this? Because we're trading the pullback, okay, we expect the price will return to this area and then continue to the upside. So what do? We'll place our entry around here, our lows below this area, our target around this high, to be very conservative, like right, the previous high essentially. So we do that, and then we target 1 to 5. Okay, so we expect now that if price, and that's a big if, right, because price may not necessarily return to this area, and that's something you just need to know. So we have to wait for price to do what it would do. So wait and see. Okay, there we go, tapped in, and that's it. Very quick one, 1 to 5. Okay, and this is Thursday London session, 11:15. Okay, now because it's counter trend, we're very conservative with our target, but of course you must always remember that sometimes price may decide to really just push and just continue to go, and you wouldn't be in regret, because at the end of the day price is counter trend, right? You're against the major trend and anything can happen, so you're not forcing anything. So by now we have all of these areas that are likely areas for price to react to. So let's draw that out. Now this candle. So these are likely areas for price to react to. And now what do we need to do? We know that when price comes into these areas, because this is a counter trend, the pro trend is to sell. right? So these are the possible areas for price to tap into and we get that sell. So what do we now do? We now put our entries around here. Okay, so for me, I'm gonna have 2 entries, and now I can swing this one because I know that if this works, it's pro trend, this low should be taken out. Okay, and then we'll have another entry for this POI. Okay, I'm just gonna put this here just in case the first POI fails, this one shouldn't fail, and then we swing it. Now we can swing this simply because it's pro trend. So let's see how all of that plays out. By the way, we've taken our our profit here +5, and that is what, that is Thursday. So let's see how the end of the day goes. So London session. Okay, cool. Now news came out, I believe, around this area. I'm not sure, but anyways, we had this POIs drawn, so we know this were the likely POIs for price to react to, and then we get that continuation. So we have that, and let's see how that plays out. Okay, perfect. So that is essentially it. Okay, so we traded the counter trend, very conservative. We had this area marked for the pro trend, this area or this area, and price tapped into this area and we got that sell. If this had failed, we would have taken a loss, but then we know that we'll take hopefully price respect this area and then we get that sell. So whichever one would have been a win-win. So for Thursday we had +5 and then +7 essentially. So let's do this. So Thursday +5R +7R. Okay, and that was it, and that is it essentially. So let's go to the 4R now. Friday. Okay, Friday, which is today. I'm doing this review or roundup. Yeah, roundup review on Friday. So this is it. So now we have something. You can see this low price failed to close below that, so that's a sweep of liquidity. Okay, so you can see that that's a sweep of liquidity. Now, okay, sweep of liquidity. So let's see what happens now on the 15 minutes. Now that tells us that price has failed to close below that guy. So if that is the case, what are we expecting? Right, let me just make this a little small so our chart is not too clumsy. Okay, so since we have a sweep of liquidity there, what are we expecting? We're expecting a reversal, right? Price has failed to close below, so we expect a reversal. Okay, at least that's what I'm going to expect. So let's see what happens. Thursday, let's take it to Friday. Okay, this guy was not used to take it out. Oh, I took my PD2 out. Anyways, so Asia session. Okay, 7:30 London session. Now let's look at what we have here. So here we have also a sweep of liquidity. So for me, seeing this, I would expect that after these lows were taken, we now have a change of character. Okay, and mind you, on the 4R, price did not close below the previous 4R low, so it was a sweep of liquidity. Now we have a change of character, so I would be expecting that price will return to this area. Okay, this candle sweep, okay, return to this area, and then we get that sort of continuation, for me reversal. That was what I was anticipating, essentially. Okay, now I was anticipating reversal simply because, let's go to 4R again. Simply because on the 4R you can see that after this break of structure, right, price registered this low pullback, tried to take out this low but failed to do so, and we had this sweep of liquidity. So with this, I was expecting a pullback, okay, a major pullback or a major reversal. Okay, that was risky, but that was the idea. So if price had closed below this low, I would just simply expect to catch that continuation setup, but that wasn't the case. Because this is so fresh in my mind, because this is what I did today. So essentially I had a trade here. Okay, my stop loss was below this area. Okay, and my expectation was the price was gonna return to this area, tap me in, and then we get that continuation. I think it was about like 1 to 5 thereabout. Okay, so let's see how that played out. So okay, no tap yet. Okay, let's see. All right, so it was until New York session that I had this price tapped me in. But also I remember I took a 1 minute entry around here, um, earlier on in London session. I wanted to catch that 1 minute entry. Price moved in my direction about 4 hour and then reversed and took me out. Of course, I took a loss because I don't take. I was targeting around. Um, as a matter of fact, let me see. I took it around here. So let's just see an example. I think about maybe, yeah, I was targeting around 1 to 8 or thereabout. But anyways, went 1 to 4 in my direction, then reversed on me, and I took a loss. So this was my second trade in the day, and then let's just see how this happened. But of course, it ended up as a loss. So that was it. So two losses for me on this particular day. But for the review, I'm only just showing you the 15 minutes setups, because if you don't have a 15-minute setup, then you have no business looking for 1 minute entry. So at the end of the day, each potential 15-minute setup, you could also catch a 1 minute entry, but of course it depends on you, to depend on your skill set and all. So this is minus 1 hour. Okay, so these are all the valid 15-minute setups based on the back test we just did now. So in summary, you can see we had can we do the analysis? So let's see wins. Okay, and then losses or lessons. Okay, anyway, so for wins we have, let me just make this compact. Okay, so for wins we have 7 on Monday, 7 plus 4 plus 4 plus 5 plus 7, and that was it. So that gives us what? Quick maths: 14, 18, 22, 27 R. Okay, and let's look at our losses. We had 1 and 2, just 2 losses, so that's minus 2R. Okay, and that's it. So if you're risking 1%, that means this week 27%, right? Which I usually risk 0.5%. So essentially that's half of that, which is 13.5%, right? And then the losses, of course, will be minus 1, minus 2% if you're risking 1%, or minus 1%. Okay, so at the end of the day, the total will be what? Total is going to be yeah, so either 25% or what is this, 12.5%, and that is essentially it. Okay, so this is the roundup, okay, for the entire week, and you can see for every single trade there was a logic to the trade. There was no guesswork, there was no hoping, there was no assumption. It was simply just following a mechanical strategy. Of course, all of this is broken down in the course. The exact thing to do, the exact way to look at the market, and of course pro trend, counter trend setups, and all of that, and how to enter all of these trades. Now all of these trades were simply just off the 15 minutes without even the 1 minute. And you can see we had about 1, 2, 3, 4, 5, 6, 7 trades literally across all the days of the week. Okay, of course most likely will catch some, will not catch some. That's the reality of the market. You will not necessarily catch all of these trades. Okay, different things will happen, different factors comes into play, but of course these were all the valid trade setups, based on the stocking profit strategy, and also the setups that I also teach in the course. So hey, I hope this was beneficial to you. Stay stocking profit, and see you next week. Bye bye and cheers. Right. Let's see how all of this goes. Right. Let's see how all of this goes. Okay, so welcome to the first live streaming I'm going to be doing. I'm doing a session. Yeah, so you're welcome. Let's see how we're going to, let's see what we have here, right? Okay, so just a sec. So just to start with, earlier today, I shared my idea for the euro dollar. And this was it during London session. So this was basically the settlement at the time. I had seen, as you can see here on the chart, I had seen price failed. So we had all of these candles here that failed to close above this high. So of course we had this breaker structure here. So this was a high and price failed to close above it, and this candle closed below it, and then it was London session. So with this sweep of liquidity, multiple sweeps, I would even say, I pretty much, was confident the price was now ready to sell off, to target this low because this low failed to take out this high. Now, this was an ideal area for price to arrive at, and then we could get that sell off. But of course, I knew that we may get that, we may not get that. So I was willing to, just literally follow with price, what the market was doing, right? And not just assume anything. Anyway, so that was that. And also on the 15 minutes, we had, the sweep of the high, and then we had a change of character. So I was confident that, price was going to sell off. However, price did not come here. So I happened to have entered. I got, two entries, one on the 1 minute, and then the other 1 minute, 1 to 10 RR. And then on the 15 minutes, I want to swing it because my long term bias is that the dollar is going to strengthen. So I'll hopefully swing that trade and hold it for the longest time possible. Anyways, that's that, right? So let's just look at the chart and let's see what's happening. Okay. All right, let's see. Re euro dollar. Go to euro USD, 8 cap. Let's launch the chart. Okay, so here we go. So as you can see here on the screen, clearly we have a lot going on. So let's start from the 4R. I explained earlier, so you can see on the 4R here. Now, as much as possible, I try to keep my charts clean. Sorry, I guess that's so small. Anyways, I try to keep the chart clean, right? So just identify structure and just as much as possible keep it, at bare minimum in terms of, the drawings and all of that. And it allows for clarity. So with this, for example, you can see here that we have high, low, high, low, okay, high, price failed to close above this high. You can see something similar is happening today, right? So price failed to close above this high, and then what happened afterwards? We had a sell-off, right? So the same thing is actually happening today. Price is failing to close above this high. After this, we're not getting, I'm expecting, this massive sell-off to target at minimum this area. Okay. Now we may have, of course, some pushback, but ultimately price should sell off. That's the expectation, right? Market structure, we're not hoping, we're simply trading of market structure. So the market is trending bearish, and then we simply follow that bearish trend. Okay. We have this high, and now we have this low, and price, reversed, failed to sweep this high, and now we expect that continuation to take out this low. Essentially, this is the trade idea, okay? And this trade idea is built off the 4R, okay, the higher time frame, because the higher time frame will always take precedence over the lower time frame, right? So we know that the higher time frame has been trending bullish. So what we've done is to catch that higher low and then trade that higher low, to the other side, to take out the weak low. This is now a weak low because it's failed to take out this high. So this weak low just has to go. That's just the bias, okay? It failed to do its job. The job of a weak low of a low is to take out a high. So if a low fails to take out a high, what then happens? The low has to go. We don't write the rules, right? That's just how it has to be. So here I have the boss on the 4R. So let me just draw that so it's super clear on the 4R. So you can see that based on the analysis from London session, I had expected or I had identified that this was an ideal POI to look for continuation shorts because this was a sweep zone and price massively, sold off from that area. If price were to return here, this would be a very good area to really swing a trade and target this low. However, you can see price failed to do that because we had this continuation here, continuation break of structure on 4 hour, a high, and then price registered new low. Price failed to take out this, the last high. Let me also add something there that I always do. Okay, so price failed to take out this high, and as a result of that, what happens afterwards? So we now expect that price, since price this low failed to do its job, which was to take out the previous high, we now expect that price is going to sell off massively. As you can see, this 4 hour candle just started belly and now tried to pull back, but it's failing. Momentum is really failing to push up. So eventually we should have that sell off. Anyways, for the longer term, the dollar should strengthen. But this is the whole idea, right, of the trade and why I also took this trade and all. So I guess that's very clear on the 4 hour. So we know why we took this trade. So you can see from London session, I had identified that we had a sweep of liquidity. On the 4 hour, we had price appears to be consolidating. All of these candles, failed to close above. You can see this. I guess they call it doji. I don't trade of candle patterns, but I guess they call this doji, and you can see it seemed as if price was going to push up, right? But you can see it failed to do that. This candle closed below this area, sweep of liquidity. So London session coincided with London session. I was pretty much confident the price was going to sell off. So all of that, of course, what I was identified here. Now let's look at the 15 minutes, okay? And let's look at why I took the trade on the 15 minutes. Now, I have to mention that on the 15 minutes, my first entry was this guy here. Okay. So I had identified that this was going to be my entry. And if I go to what I posted on yeah, I posted a link anyways. So let me see if I can open that for you. Oh, okay. So leaving this. Okay, we're gonna come back to this. Anyway, so I had posted this. So this was the trade I had posted earlier, right? As you can see, so this was it. This was the setup. You can see everything is just in place. So I had this setup here that this was going to be my entry if price were to return to this area, but price apparently failed to do that. So if I play this candle, you'd see the price actually left off. Did not return to that area. You can see where we're at right now with respect to price, right? So price failed to tap into this area. So what I then did was to simply, look for additional entry. And how did I get that entry? Now I'm going to show you because you can see here we had this continuation eyeballs, right? So I was pretty much confident that now price was going to pull back a little bit, hopefully respect this high and then sell off. So price didn't have to return to this area essentially. Okay, and that was how I got that trade. So let's go through. Let me walk you through that exact setup and why I took it. Right. So just a sec. Okay, so we're back here on the 15 minutes. So let me just expand this. So I was able to catch two trades in particular, actually, and I'm going to explain how and why I decided to catch those trades. So on the 15 minutes here, we had this. So price failed to return to this area, and then we had this continuation eyeballs, as you can see here, right? So this continuation eyeballs essentially, was basically it's more like stacking the trade. Okay, so if I find structure, I simply just follow structure and just take the trade. Okay, so what happened was price, gave this beautiful entry, on the 15 minutes, and then we had that, price return tapped into it and then sold off, and that was the trade I took. Now I'm wanting to swing this trade. It's like about 1 to 20, and I have my target, at around the daily low and all of that. The reason is simple. I'm hoping that, well, not hope, based on market structure, you can see here on the daily that we've had, the series of high lows, highs, and now price is pulling back. So based on the price action here, this has been taken out. Okay, I'm expecting that this low, has because this low has failed, I'm expecting the price is going to push downwards towards this area. So I'm targeting somewhere around here, right, for my swing, entry. Anyways, but that's beside today's main trade. So for today, I've entered, I have this 15-minute setup.
This 15-minute setup here I entered, but also I also entered the 1 minute. So let me show you that 1 minute entry. So this is the 1 minute entry. So this is a 1 minute entry. So you can see here, this is actually 1 to 11, 1 to 11.3 thereabout, and that's my target. So essentially it's targeting the previous, the low that I mentioned earlier. So this trade is playing out, and let's hope that this trade continues to play out and then doesn't really, reverse on us, all right? And then we begin to lick our wounds, but hopefully it doesn't reverse that much. So we just have a little pullback and then, the trade continues. But why did I take this trade? For me, it was on the 15 minutes. I had seen the consolidation, I'd seen the structure, and all of that, and I was pretty much confident that after this, after price changed, we're having this bearish order flow on the 1 minute, and then it sort of tried to pull back, but then failed to continued. The trend changed from bullish to bearish. I was pretty much confident that this area was going to hold. I was willing to take a trade from that area. So this was the first trade I took, and that's the trade that's also playing out. So hopefully this does all its whatever I want to do, pull back a little bit. Hopefully it doesn't return to our entry, and then have that continuation, and we take up our profit for this particular trade right there. But I'm willing to swing this trade, and let's see how it works. Now for New York session, based on price action, so we could have, well, if we get that type of you know market structure where price returns and then gives us an entry, maybe I can stack the trade, or maybe not. Really, I don't know. I already have two positions open, so I'm willing to just let those play out and not really force my hands. Yeah, so essentially that is it. So for New York session, really, I don't think I'll be having a trade right now. I don't think I'll be taking the trade. I think I'll just let it play out. And this basically how I trade. It's simple, as you'd see on the chart. Simple chart, simple analysis, simple market structure, falling market structure, and that's basically it. Nothing complex, nothing too fancy in a way. That's just it. Literally, you can see simple market structure, sweep of the highs, change of character, expectation of a pullback, and then continuation. Break of structure, internal boss, internal break of structure, a pullback, and a continuation. As simple as that. So just stacking the trade and stacking the positions, right? Hoping that, of course, structure holds. And the reason why we're holding this, we could have taken profit around this area, but the only reason why I wouldn't take profit is because of the higher time frame narrative I have. Based on the high time frame narrative, there is no reason for me to believe the price would reverse from this area and push upwards, right? In addition to that, the unemployment claims news just came out, the fundamental news, and the dollar is strong. Okay. And that just simply tells me that this is a temporary pullback and then we're going to have that continuation. So I don't have a reason there's no reason for me, technically and also fundamentally, for price to push upwards. So I'm expecting that this is going to hold and we're going to have that massive sell off. Okay. At least to this area. That's where the money is. So this is essentially it. And this is based off the stock in profit strategy, by the way, that I trade. On the that I trade and I also teach. So if this is the first time you're coming to the channel, by the way, if you love this, if you like this, just let me know in the chat section. Leave a comment, leave a like, share with a friend, and all of that. It just helps to encourage one, and also it helps me know if it's something you really enjoy. I can be posting more of streams like this. So anyways, make sure you subscribe if you haven't subscribed, like the video. And in addition to that, of course, I've been also putting out a lot of streams. By the way, as you can see here on the YouTube channel. So the YouTube channel, of course, is nascent. But there's a lot of high quality material here for you. And you feel free. Of course, it's free, so you can watch as much as you want to watch. There's currently a live stream also playing out in addition to this one, basics of microstructure, a video I released a while ago. So you can just binge, watch all of these videos. Sincerely, if you don't start, you can't change your position. All right, you can't change your situation. So if you want to become a trader, if you want to become a profitable trader, you have to find people who know what they're doing, who seem to know what they're doing. I would use the word same, and then try to replicate what they've done, right? Because if you replicate what you've done, then you get the results that they have. So yeah, so on the YouTube channel, anyways, you're gonna see a lot of videos. There was a time I also had a free mentorship course. It's about 12 videos thereabouts, so you can also watch it if you want to watch it. A lot of helpful resources really that I've put out here for free. By way of putting out all of this out, I know it's going to benefit a lot of people, and I hope you take advantage of it. So that is that for the YouTube channel. Of course, on social media, to just at Paruto Capital. You follow on Twitter. What else? Let me see. And also follow us on Twitter. You can follow us on Instagram, Paruto Capital. So on Twitter also we have a page at Paruto Capital. You can also follow us. You can also see that streaming this session on Twitter. The position I took in the morning, you can see all of that. As I'm updating this as it plays out. So what else? Yeah, so that is it. And then of course the course itself. So the Stock and Profit Mentorship course is one that if you want to join the Stock and Profit Mentorship, that is one place for you to go to, really, and then you'll be part of the community, the paid community, of course, where I can mentor you and show you, in depth. The course itself, it's holistic. It covers everything: the way I trade, how I look at the market, why I take trades, why I take position, the entire logic behind a trade. This is something you're going to see on the Stock and Profit Mentorship course, and I advise that you also check it out, really, because it's going to be something that I believe is going to be beneficial, right, to you. So all of these resources are there, but if you're not willing to commit to full-time trading right now, or you're not really willing to commit resources for full mentorship, go on the YouTube video, watch the free videos, utilize all the resources that are there for free. This video, for example, is for free, right? And then when you're willing, when you're ready, and you want to really take it serious, then I think it's good you get a mentorship, and also be part of the community. In this case, the Stock and Profit community, where you can really ask questions. I can share stuff with you, and all of that, right? And also, in addition to that, there is currently a promo going on, right? So of course, I hope you can see that on the screen. Um, just by the way, is this even 20% off or 15%? I hope that information is correct. I think it should be 15% actually. So apologies really for that. So it's actually expiring this week. Is it this week? No, 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 no. On the 31st of August. So the 15% off is going to expire then. So please take advantage of it. If you want to take advantage of it, do take advantage of it. Um, yeah. So that is essentially that. So the Stock and Profit, for the Stock and Profit mentorship, just to walk you through this. So there's a monthly subscription which gives you access to the full course. So you get the full course, you get the trading plan, exactly what I used to trade. You get the trading journal. There's a free trading journal I also give. I'm giving a lot of resources for free, but this one it's far better than that, of course. So with a lot of the straight setups are there, the back tested data is there. You get that, and you also get lifetime access to the trading floor. And inner cycle community. This was something I decided to do for now, so it might be limited, it might change. But for those who register for now, they get lifetime access. You have daily analysis service, so I post all the time, every day, New York session, London session. My chart markups. You also get access to the analysis hub. So this is essentially where all the videos on market insight, market analysis, trade reviews, a whole lot of videos. Okay, posted there. I post them all the time, my weekly forecast and also my weekly recap. So by the end of the week, I'll go through all of the price action, and highlight, the probable trades, the trades that met all of our criteria in terms of our trade setups. I always update that. So every week. Also, you have access to bi-weekly back testing, right, and QA sessions. And then you also have access to the SIP setup, the Stock and Profit setups, what I actually trade and how I take those trades. So you also have access to that. Part one. Part two is reserved, for the 6 months pro level access. So you have everything in the monthly, in addition to the part two of that, the SIP setups. You also have two one-on-one private sessions with me. You'd also have one trading psychology masterclass session in your 6 month, and then you'll have, of course, the completion certificate. Of course, if you know how to trade, really, you may not necessarily need a completion certificate, but well, you can hang it, you can frame it, you can do whatever you want to do, literally with that, right? So yeah, so just a sec, excuse me. Okay. Is a very crappy microphone. I didn't realize that. Excuse me. Okay. Is a very crappy microphone. I didn't. All right. So yeah, so that is that, right? So you get all of that with the 6 months program, and then with the 12 months program, you get everything you have in the 6 months program. Okay, and then for 12 months, I even get more. So with the 12 months program, you have 4 one-on-one private mentoring sessions with me, and then you'd have 3 trading psychology masterclass sessions with me, because I really just want to see people who subscribe to this succeed. The reason why I don't give a certificate for the monthly program is because I don't believe in 1 month you'll be able to cover all of the content that has been provided or have been provided stocking profit mentorship program. So the certificate is strictly for those who take up to 6 months and 12 years. And I want to be realistic because trading is serious business. It's not just for people who just see flashy cars and they see flashy things and they say, oh, I want to become a trader, I want to do this, I want to do that. You have to know what you're doing, committed to it, like 120%, right? Like 1000% literally. And we have, of course, the roadmap. There's also the roadmap. I try to lay down the roadmap that if you should follow the stock in profit mentorship from month 1 all the way the foundation building phase, practice, funding and scaling phase to month 12, you should, become exceptional in truth, right? You should become exceptional. So all of this is there for you. So use the free resources you have on YouTube, binge watch everything. And when you're satisfied and you really want to commit to mentorship, then you can go on to the stock in profit mentorship. Okay. So, hey, so that is it. Okay. I hope this has been beneficial to you. Like I mentioned, I don't really have a trade for the New York session. I wouldn't be taking a trade. I'm just going to be watching my position. The price comes to this area and gives us, that profit. We take our first profit for the 1 to 11 trade. We'll take that profit and then I'll swing this, this particular position. So that is it. I hope this is beneficial to you. I hope you've actually picked something from this, right? Oh, sorry, I wasn't even sharing this stuff. So, anyways, I hope this is really beneficial to you, and I hope you really have picked something from this on price action and all. So, just saying that now with this, no trade formation. I just wanted to show the chart and also explain this. There'll be no trade for me during New York session. I'm just literally going to be watching the market and just watching what price does. But I expect that this will continue and then we'll get, our first take profit on the 1 to 11 on the 1 minute trade that I took here. We get our first, profit, and then I would swing this other trade, maybe till tomorrow, Friday, and maybe till next week. Who knows? But long-term buy is that the dollar is going to change. So I'm willing to hold that for a while. Okay, so that is it. Enough of me talking. So, hey, stay stocking profit, enjoy and stay profitable. Okay, and see you in the stocking profit mentorship class if you decide to join. And by the way, you can also join the trading floor. It's free. You don't have to pay anything for that. So all you need to do is just go to the Twitter profile. I think I'm going to update this from the pre-Telegram to, the Discord trading floor. So just our Twitter profile. And when you go to our Twitter profile, you'll be able to see the link to the Telegram, and then you can follow that to the Discord trading floor. So I'll most likely update this, the from Telegram to what do you call it now? Discord. Okay, so you can also join it. So it's a pleasure sharing with you. I hope this really was beneficial to you. So hey, stay stocking profit, and until next time, see you. Bye bye. Cheers. I'm gonna leave this streaming for a while, so just enjoy.